Where am I? Here we are. Morning, guys. How we doing? Good to see you. Happy Tuesday. Happy off center non-farm payroll day, I guess. How we doing? How we doing? Hope you guys are well. Good to see you, Louis. Miss K9. How we doing? Alex. Get out of here, mate. Ahmed, how we doing? How we going, guys? I think it's just me running solo today. Ashley had some other stuff to attend to, so feel free to throw anything at me at all. How we doing? How we doing? We got a busy week of data this week, and kicking it off today with our strange Tuesday non-farm payroll. So we'll see how that goes. Anyone's guess as to exactly how this plays out or where this comes to. Obviously, given the disruptions we've had, so all right. I'll send it to you now. Jump in. But yeah, let me know how you guys been doing. It's been boiling hot over here in Australia, so I am sweating right now. I know a bunch of you guys, it's winter around your way. It's snowing over there, so I'd happily trade right now, to be honest. But hey, let's get some music going too in the background. Are we? There we go. That's better. Alrighty. So first thing I'm looking at today, euro dollar. I think we got more upside through here. So last night we did manage to establish a slightly new high. Didn't hold it the whole way through, but we do have high lows coming through. And then today, Asia, we've pretty much traded sideways. So looking for more upside on euro dollar. How are we doing, Tiny Toons? Good to see you, man. Good morning. Good morning. Let's jump down to a lower time frame. So as I've spoken to you guys before, this was sort of my end of year expectation. This sort of just above 117 here kind of range for euro dollar, and with a possible move up into 118 coming towards the end of the year. Now, obviously, a big decider for today is going to be non-farms for today. So we'll see where we get. But right now, we're definitely still establishing that move higher. It looks as though we do want to punch this over the next hour or two. Pound also having a ripper. Obviously, we had the UK data out earlier, which spurred that move. So overall, more upside. I believe about 135 on the pound as well. There's like 4.5 billion out of option expiries today. So that may end up being quite a draw. How we doing, VJ? Afternoon. How you going? We will definitely take a look at gold, my man. Do not fear. What else with the majors? So dollar yen, still further downside. We're gradually, drifting off. We've also got Bank of Japan this week as well. Don't forget, guys. So they have basically said they want to move forward with the rate increases. Hence, we're seeing that sustained downside pressure. Right, that in combination with the rate cut and slightly dovish tilt from Powell the other day. This is sure to continue. Yeah, drop any questions, queries, anything you guys want me to look at and such. Go for it. You got me all to yourselves today, so, or at least for the first hour. How are you doing, Infinity? Good to see you, mate. Good to see you. Morning. All right. So euro dollar, dollar yen, pound dollar. We had a quick look at Aussie dollar. Similar deal. I do actually expect further highs for Aussie. So copper prices and such have been doing quite well. That as well for Canada. Canada has also had that shift towards potential rate increases. Now, I don't necessarily believe that we'll actually get rate increases just yet from Bank of Canada, but they're definitely starting to tilt or lean that way in terms of the narrative. So, where am I from? I'm from Australia, my man, in sunny Queensland over here. So yeah, very, very warm right now. I do trade daily, if that's what we're asking. Indeed. Quit my spy job. Why would you ever want to quit your spy job? You know? 007's great. Never gonna quit. But yeah, so Aussie dollar, I think also we get a bit more of this upside. We got pulled down last night from some of the declines on indices. So we saw that NASDAQ come down. We did map out yesterday. We didn't quite get to the sort of peak top through here, looking for that slight push on. We got this impulsive candle coming down through here, coming to New York, and just didn't look back, right? So Aussie dollar obviously having that risk on, risk off correlation, always mentioned to you guys, basically got pulled down through there last night as well. But we have established a nice little pickup after the lows from Asia this morning. Hey LJ, was wondering if you could talk more about the standard deviation channel you're using. Yeah, definitely. We can definitely go on with that as well. So NQ fell from Tokyo Open, made a low and is coming up. Currently it's on exactly halfway up from Tokyo Open. So we're looking at more upside after some correction through New York. Or is it going to be a bloodbath again? Yeah. So that's definitely going to be the question for today. So obviously we've got non-farm payroll today. It's going to be a messy one. We've got split pieces of data from the past couple months feeding through. It's also going to be a bit of a question as to the collection of the data. Just how much people sort of trust it, or think they can take it as valid. We also get housing starts and retail sales coming out at the same time today. So very much a stacked release all at once. So I'm sure it will be a bit of a bloodbath per se, because we're going to get push and pull from each of the data points. A bit of a messy one. It seems to be, though, from what Powell was, sort of leaning towards. He's sort of, or the Fed has sort of looked at some of the tangential bits of data and expect that payrolls could be quite a bit lower than what we've seen. And also coming into end of year revisions, that we could see about 60K or so a month lower than the actual numbers that we've got. So overall, that's going to be a big driver today. Exactly where we end up, anyone's call, quite frankly, because it could be the situation that we get a bit of a, say we do get the poor numbers, blow off top into here, and then a pullback, or whether we actually stay up in this area. Very hard to call right now. Like I was saying, pound options pricing is looking for a move up towards 135. There's a bunch sat up there, but then euro dollar is actually all clustered around this 117.50 kind of area, just below where we are now. So it may be a bit of a knee-jerk reaction from the payroll with some selling to follow. Now, that's assuming everything sort of comes pretty in line. The market has sort of been a bit prepped for a bit of a worse payroll outcome, especially after everyone's sort of looking for that or got the underlying suspicions. We're getting used to the lower payroll prints overall. We've still got, we don't have the need for job replacement because we're not getting immigration and everything. So we're still at the replacement rate. So the lower numbers are overall not too bad, but with what Powell and some of the Fed members have been saying recently, kind of indicating as though they're expecting some other weakness to creep through. So on the NASDAQ though, we can take a look at today's expectation, the options contracts today. So currently sitting about 25.079. So if we go over to the NAS, it's about a touch above where we are. So not very far, pretty much in line. The underside of that drop from last night. So yeah, I still have the tilt to the downside coming into Christmas for indices. Not as though we're going to fall out of bed, but I'm quite skeptical on a further sort of Santa rally going right into Christmas. At this point, I think we'll be pretty consolidatory up around these highs. But like I was saying yesterday with Dirk, very dubious of further new highs being printed. Coming this close to end of the year, a bunch of risks on the horizon, both from the job side of things. We still have to get the announcement of the next Fed chair, and we've had some ripper gains this year, despite all the turmoil. So obviously, apart from a bit of window dressing, that kind of thing, like we spoke about yesterday with Dirk, I would say most likely people will be a bit tentative to pile in going into Christmas this year. So, see where we end up. Going back to Josh, about your question about the standard deviation channel. So, let me bring up something else. Just give me 1 sec, guys. This should help. Let's see if I can get this up. All right, so we'll have a look at that in a sec as well. So the standard deviation channel, pretty much how I use it is both as a bit of mean reversion as well as extension of price. So you can use it in a dual manner in that sense. So for instance, you can see how the channels here are basically encapsulating point-to-point price action. And anytime you sort of dip outside of that or start to run those edges, you tend to get a return move higher. Now, why that is okay, basically you have this center line that's going to be the midpoint. So that's the mean price. And this is based on the past 120 bars. I tend to find that works quite effectively across multi timeframes, 5 minute, 15 minute, 30, 1 hour, 4 hour, even up to the daily. Once you get up towards the daily, you do have to take a little bit of further adjustment, a bit of a grain of salt with it, because now you're encapsulating a very large amount of time, a whole lot of data and other moving pieces within that, which often some of that prior data is now very old and we've moved into a new spectre. So why 120 periods? When you look at this, it pretty much shuffles back into the prior sessions and encapsulates sort of the day's trading data, right? And then still, say, if you're trading through Asia just after rollover, it's going to capture that movement from London, New York, and you sort of get the continuation, flux back and forth for that. So what you're basically looking at with this, you got then the 1 standard and 2 standard divs on the top side, and a -1, -2 standard divs on the bottom end. Now, pretty much what you're looking at is it just standard deviation, 1 standard div, 2 standard divs. Whenever you have a normal distribution of price of a data set, sort of a law of larger numbers type thing, between the 2 standard div positive and 2 standard div negative will encapsulate 95% of all data, as you guys can see. So that's going to be 95% of all price action. And so it's very rare that you start to get out towards that 3rd standard div. And then you can see that's about 99.7% of all price action. So anytime you start to move outside of that, you'll tend to see that price returns back to the mean and then often travels to the other end. The pieces with that is much more effective and reliable on like a short-term time frame. On a longer-term time frame, you start to encapsulate more macro risk, fundamental risk, black swan type events that won't fully be in the data, right? So that is where these types of modeling in financial assets starts to break down. And basically what happens on that bell curve, you get what's known as a fat tail. So a fat tail is basically where the standard distribution doesn't actually come neatly down like that. And it's typically always on the negative end, right? Because these adverse shocks tend to have a larger impact on the downside of an asset. Say you take stocks, for example, and far more rare on the upside, right? Particularly when you get say you're trading indices or something, right? Now, certain particular stocks, say if it's like a pharma stock or something, that can definitely have it to the upside as well. So hence, a lot of people try to short pharma stocks or drug makers or that kind of thing. Once they've released the drug, and then expectations go that, this might actually not be so incredible as once thought, and then hence, the trials fail, there's some kind of problem, the company comes off. Now, if it succeeds, often those companies will rip 1, 2, 3, 400% in a very short amount of time. That would be considered a fat tail on the positive side. Now, why that matters is because if you're trying to model this kind of stuff into something like stocks or an indice, you're going to have a skew to the downside, right? And so typically people are positioned long, which means if you're running off that data, you've actually got a slightly more asymmetric price exposure to the downside, which is obviously not what you want. You want that to the upside. Now, if we go back to this in real time, using it on a shorter term time frame, you're not going to have as much exposure to those adverse events, right? Say in your 15, 1 hour, that kind of time frame, you might have something, say like a Trump tweet, right? Something like that, or could be on indices, something to do with AI, whether it's NVIDIA, Microsoft, Oracle, Amazon, whoever, take your pick at this time. So if there's some kind of negative headline with those guys, you'll see stocks just, tank, right? And that volume will dwarf the prior trading ranges because those companies are so big. Now, if we go down to 15, you can see this is where we've gone. So this is euro dollar here. You can see at each of these points, this is where we've traveled outside of the 2 standard div. This one that I have here, you can only put a 1 and a 2, but I can probably try and find another one. It's often good to then also slot on like a 3 standard div onto the channel as well. But basically, anytime you're looking beyond that 2 standard div, that should encapsulate 95% of price action. So anything outside of there is going to be the final 5%, essentially, which means typically then price is going to move back into the range because markets obviously stochastic. They go back and forth. You've got buyers and sellers on both sides. People are positioned differently, long, shorts, taking profit, new entries. So you get the back and forth motion. So the typical way to play this is, anytime you're outside there, buy. Say you took the buy on the low end through here, take profit up here, short, look for that mean reversion, either down to, now this is where you look at adjacent structure, right? So, you might be targeting either the 1 standard div, the midpoint, or one of the lower bands, and you're going to combine that with the market structure to the left. Obviously, we've got this kind of mixed range through here on euro dollar, as this was last Friday's price action. So it's not a perfect example of price structure to the left after we had that big run up. But you guys get the idea with that basically you use it as a confidence interval of the trading range and then line it up with your higher price structure along the way. Then you can also have, a couple moving averages, that kind of stuff as well, just to get that good sense of momentum coming through here. So, yeah, that's pretty much it. Trade it point to point, and Bob's your uncle. There you go. So similar deal here with the Aussie. You could have seen that, last night after it came off, we had a slight tick up early Asia today, and then fell right off. Came outside the 2 standard divs. Great place to buy. That'll be your buy entry somewhere in here, and then you'd look to target the top side of the channel, which is exactly where it ran off to and now pulled back from. There you go. Morning, Stephen. How we doing? How we doing, Scott? And yeah, we'll jump over to gold in a moment as well. Gold's not doing too much just at the minute, so we will jump over there though. 120 divided by 24 hours a day is 5 and 5 days a week. Yeah, exactly. Okay. Akram, how we doing? Good to see you, brother. Good to see you. Sam saying, I prefer linear regression channel as they give you the R factor, which helps identify the data set is trending or ranging close to 1 versus closer to 0.5. They fit almost the same. Yeah, so you can, this actually does have like a Pearson's R you can put on here as well. So this is basically, yeah, linear regression channel. But yeah, if you mean like a different, as far as the indicator, that might have more options. I'm sure there's another one, like it's pretty... I'll look them up later, but not... yeah, there's plenty of them out there where, yeah, you can slap on different colors, other pieces, combine it with, entries, closes, open, low, high. You can often connect it to... Some of them allow you to enter in data from other indicators at the same time as well and run off that. So no worries, my man, no worries. But yeah, so any further questions on it, just ask. But yeah, it's something you can use quite nicely alongside, sort of any other indicators, market structure, whatever it might be. It tends to be very, it's very complementary to pretty much any approach that you have out there, which is why it's really good. Scott saying, what's your thought on calculating the speed of difference? What do you mean, like using some kind of oscillator? Is that what we're talking about? Like velocity of price? Is this what we're meaning? Follow-up question, are we looking to touch past the Tokyo Open and move past highs to give room for the market to react to the news? I assume you were talking about NAS, mentioned before. I mean, where was the Tokyo high? Up here. This is where Rollo was. Let me go to 1 hour. I gotta say, I mean, this looks pretty soggy right now on the NAS. I think it's going to be purely dependent on non-farms, right? So, because either we'll get enough positive reaction, we could end up back at the 200 moving average. Again, come back into where, like Friday, that we came off, shelved off from. It's either that or you're straight down back to the price support sort of trading range down here. So I would personally kind of step aside from NASDAQ overall. I don't know if we'll get to those highs, right, from the Asia high. I'm, like I was saying before, I've got the tilt to the downside on the indices right now. So if anything, I would prefer to be stuck short overall. But I got to say, this structure right now, I don't particularly like. There's no real decent entry point. If you were looking for that entry point, yes, up by the Asia high would be ideal. But yeah, I'm not so sure we're going to get it coming up towards non-farms. It kind of looks like we want to consolidate a bit through here. You know, it's probably some better assets around. The speed it takes to travel from each line. Okay, so going sort of like point to point, right? Yeah, you definitely can. I mean, obviously, if you're getting like a massive drop like that, and then you're approaching that, you know, -1 to 2 standard div, often you'll find, you know, that ends up being a pause point before recovering. So yeah, just like how anytime you get any of these big impulsive candles, as long as there's not been, you know, it's sort of off typically some kind of news headline or some kind of catalyst that pushes the market there. That or else sometimes you can just have a break of a key level, of course. But so long as it's just a minor piece of data and not something like structural change from the Fed, where you're going to see, you know, continued running, then yeah, that can often be a decent point to pick up from. So that's something where you'll take into account. You can use like a stochastic or RSI or something, just to look at that price momentum, and you'll see, you know, starting to fade, starting to turn up. Stochastic and RSI, you know, they're never really good by themselves. MACD, whatever you want to use, but if you start using them in conjunction with some of this type of stuff, they can be assistive. Because this is, you know, basically statistics. Whereas the MACD and RSI, they're very skewed per the time frame you use it on, and that's always lagging. Yep, in shorter time frame to look for opportunities before the news. Do you mean in terms of using like the deviation channel, or are you looking for like will price get there before the news as like a direct answer, I guess? Because right now we are picking up. We've picked up off the lows. We've come up by the highs here. You had like a very small sort of micro channel created through there, right? And so we broke out from the tops, broke the head there, and came up to this point where we fell during Asia, right? But yeah, I mean, we're not exactly accelerating hard per se. Akram saying, agree, DAX following the same sentiment, could range, but short's more probable. Yeah, just looking at indices across the board, they just seem very lackluster, like I was saying. And I personally don't see much reason, you know, if I've got capital sitting there to deploy, why would I want to be jumping ahead of, you know, potentially jumping in front of that train at this stage in the year? And particularly, I mean, it's not just the non-farm payroll today. We've got a bunch of the other data coming out through the week. So, because what's tomorrow? US-wise, nothing tomorrow of major import. We do have Williams talking tomorrow from the Fed. CPI is on Thursday. That's what I was looking for. So week on week claims, and then CPI on Thursday, and then PCE on Friday. So we got the 2 inflation releases in 1 week, back to back this week. So yeah. I mean, DAX is it's trading very similar to the US indices right now. So Scott was saying the reason I mentioned speed is because I use acceleration, deceleration of the point of control, 1 hour speed difference. Just think this might benefit. Yeah, sure, definitely. Yeah, you indeed. Like I was saying before, like it's a good tool that can complement many approaches and strategies, and you can merge so many bits and pieces in and find different reoccurring structures or patterns or approaches to both entering and exiting price across various assets, right? So yeah, it's really good. Tony's saying, got it, thanks mate. I'll log in with my own account. I just realized that I've been commenting with my sister's YouTube after seeing it on your screen. Dude, that's all good. That's all good. That's hilarious though. Sister's YouTube account. Nice. Gold. Everyone was asking about before. I haven't jumped over to gold yet. So, as you can see, we'll go out to higher time frame in a sec. But I mean, since sort of mid-Asia, we've done pretty much nothing. Right? We had the drop off in the morning. I believe silver's down a bit too. Yeah. So we had the drop off in the morning. Right now we're trading pretty much sideways with a slight downward tilt, not doing too much, but go out to higher time frame. So let's hide all of this stuff. I'll even hide this for now. So the key level, obviously, everyone's got their eyes on for gold coming into the end of the year is up here, the 43.80 level. So all-time highs. We had this break above. We've had pretty consistent run higher. You know, some higher lows the whole way through. Kept that momentum. Going into last Thursday, Friday, we got the break above the highs that we set earlier in the week. And now trying to have another go towards the all-time highs. At this point, we've failed. We obviously got the big downdraft on the Friday, rallied back up through the Monday early in Asia, and then last night we did get rejected once again. I think we actually created a slightly lower high just here from the Friday high. So looks as though at the moment we're coming back to test the top side of the highs that we created through last week and the week before, right? So I think that's going to be your next point of call as a test. So that's about 4260. Now, either we make it directly sort of to that level, and then ideally you'd want to see not going beyond that wick would be ideal, right? So if we get a slightly higher low versus that wick low through here, and then into the support from these tops, that would be a nice potential rebound point from there. So then you'd see us come up, right, and potentially go for the other all-time highs, 43.80, right? Now, at the moment, the other thing, you know, obviously gold being gold, you could easily just see us pull back to a bit lower, so 4240 to about 4220, and that comes in from. Firstly, you've got that trend line there, but the major one coming from the all-time highs up here, which kind of runs through there, right? And that's that peak point there that we got capped at. that comes right in line with that 200 moving average on the 1 hour. So I wouldn't be surprised to see us just crack right through here, come to 42.35 or so, and then we get some kind of bounce from that point. That would be my preferred entry, just as far as coverage. And then you've got these levels down here to rest on. So you could take a short from here. Stop below those lows where you had the change shift of momentum and the break through there. And then you could look to target all-time highs potentially, if we're going to get that final drive higher towards the end of the year. So that would be interesting to see if we can actually push beyond it, if we get another test. LJ, what do you think about upcoming year for 2026 for the markets? Can we see more movement? Definitely. So I think next year is going to be pretty interesting. Actually, I think it's going to be a bit chaotic, even though you would think this year was quite chaotic, which it was to a degree. But it was kind of it was like a known type of chaos, right? Everyone knew, Trump's coming in. He wants to do tariffs. He wants to do all sorts of wild stuff. He tweets all the time, gets involved in places he shouldn't be getting involved in. Does things like the government shutdown. Right, done that before. So yeah, this year was quite chaotic with a bunch of that, but it's kind of one of those, it's Trump type thing. So I think next year we're going to be in a slightly different position in that he'll still be trying to play some of those games. Probably not as hard, obviously, as the first year of his term. The Republicans and stuff will be looking towards midterms, that kind of thing. So it'll be a slightly different angle and agenda. But we will obviously have the shuffle of the Fed. And, of course, his increased rhetoric around the Fed, around their actions, what he wants from them, and whether that actually increases or he sort of steps back and goes and lets them do what they're going to do. Right? How is he going to step back and let them do that? Probably doubtful. I'm sure he's getting a few people in his ears saying, like, just drop it and leave things be. But yeah, first point of call is going to be to see who he actually picks for Fed chair. Right now, either way, it's going to be a Trump favorable, right? Someone aligned with his interests and ideas. I don't know that the Fed will be so amenable to just sort of dropping rates, towing the line of whatever Trump wants. I think there will be a bit of pushback. There was chatter in the last Fed meeting that they didn't see as many dissents, and people were arguing that, like, I would have liked to see more people dissent because basically they're saying that they'll do what Trump wants otherwise. And it's like, it's not really it. They're going to agree what they're going to agree. If anything, potentially even try and stay unpolitical by agreeing to the cut. I mean, that's what Powell wanted, looking for. They're just towing the line of the current Fed layout. So the other portions next year, obviously we've got labor force being a bit structurally weaker, seeing some cracks there. The bottom end, we've got the K-shaped economy thing going on still, right? So the top end of town doing very well, assets growing very nicely. Bottom end of town, we don't have inflation necessarily running through anymore, but obviously prices are still quite high from the inflation that we did experience. So that's still hitting their wallets very hard. They're not doing so well. The Fed is trying to tackle and still dealing with the potential specter of inflation creeping in a little bit more. It looks as though they're coming to the deciding factor that's not really going to pop off. The tariffs haven't played a huge role. Companies have definitely they've staggered out their price increases over time because they know the consumer can't really sustain it, and they're not going to stomach it either. They'll be very, very willing to change their spending and consumer habits. If whatever company starts jumping prices up all of a sudden, people just start going to Walmart or any of the cheaper names out there. So we get those two things in conflict at the same time. A bunch of liquidity being pumped out by the Fed. We've got the TGA right up there. We've got Trump potentially giving out his stimmy checks. And so all of this is going to be a little bit in contention. And then obviously the big elephant out there is AI, right? So does the AI boom continue? Does the level of investment continue? If it slows down, does that start to spook the market and those, looking for this further growth? If we get that somehow coupled with some of the, because if we get labor force coming off, some of the US data weakening for any reason, you could see that investment start to come to a halt. And then it could become a bit of a self-fulfilling sort of prophecy type thing with that, and just, snowball effect across the board. And so in that sense, we could see a very big downdraft. And from what it looks like right now, we'll actually get some better data coming out of the US. Though I think it will be a bit choppy. So there'll be some good, some bad, some good, some bad. And everyone will be going, it's all over. Oh, we're so back. It's over. We're so back. We're back and forth, back and forth. So yeah, I think it's going to be messy. I think things you can rely on going up, continuing next year, is going to be stuff like gold. So I know we talked about it a little while ago with Johnson. Gold's been an absolute tear. It's almost looking sort of parabolic-ish, right? But I would say coming into next year, we still probably got some more highs coming into 5K. Wouldn't be surprised at all if we see 5.5, potentially up towards 6 sometime next year. And that's going to depend on a combination of things coming together at the right times. Because the other thing as well, you have to remember the gold as an asset at this price level, that is a massive, massive amount of capital right there, right? So for it to make further leaps and bounds up ahead, you now have to assume huge swaths of the capital out there in the global economy has to continue to flow into there and not into other places in the market. So it is your only prime defensive asset at this point, however. So for the meantime, it looks as though we will see some more upside for sure. But yeah, I think we're going to do a further sort of prediction type outlook thing later on, possibly next week or something, with myself, Jonathan, and Dirk. So we'll do a deeper or more put together projections then. Scott saying, one last question. What are your thoughts on using 8, 13, 21, 34, 55 minute timeframes rather than 10, 15, 20, 30, 60? Yeah, you definitely can. The funny thing is you will find that a lot of the sort of moves on each 5 minute, 15, 30, 1 hour candles do tend to occur at the 8, 13, 21, like 27, 34, like you're saying, 44, 53, and then like 57, 58. So yeah, you definitely can. It's sort of just once, I don't know, it's just something that goes on in the markets with the statistics as you print the next candle, algos read things, etc. Flows and stuff come through, and yeah, there's no specific time frame or anything that you have to use. You can use whatever you want. Obviously, this is just sort of simple. It's like people count, 5, 10, 15, 20, etc. Right? So it's sort of more just a human thing that everyone just gravitates to that, just because it's simple, basic, makes sense. But yeah, so you definitely can. I guess the only point to take into account is that, majority of people do look at the existing timeframes. You also have a large portion of the market that doesn't look at timeframes at all because they're computers. So yeah, but I would say it depends more on does it have value to whatever approach you're using or trying to implement? What's the actual reason for the decision that you might seek to use those timeframes, if that makes sense. Yeah, and Akram's saying, depends if you're trying to read fractal nature of price, 1 minute, 12 minute, 144, and so on. Yeah, price is relatively fractal to a degree, right? At various portions of time, it's going to be, more noise. High time frames, less noise. So there is a slight difference. But they definitely are largely fractal. What do you think of 3R on intraday for indices? Too risky. I mean, what does 3R mean? Because you can definitely trade a 3R. Like this could be 3R, right? So there you go, 3 exactly. Right, you could totally trade that. Okay. It depends where you're entering, how you're sizing the trade. So, for instance, you could have looked back here, say when we had this down drop, right? And you see the head here, right, with that wick and this sort of body trading through here. You go, okay, I'm going to take a long back into this cluster, the moving averages, just by the head of the rebound sort of channel. And then that comes in with those lows. You'd be targeting, that would be exactly 3, right? So if you look back up to where we sort of fell off, I mean, that's pretty reasonable, right? So you can definitely trade 3R. It just depends how you're sizing the trade, where you're positioning, where you're buying in from. Because you don't want to be doing, like, if you're doing some kind of thing like this, right, where you're jumping in here and trying to run for, like, say, like that, you could still run that. Plenty of people do. Lower time frame, that could be a trade back up into the Asia high, like we were talking about before, whether that occurs. Trouble is, when you're trading something like that, being that tight of a stop, you're going to be quite likely to get hit, right? Because price could very easily come here, hit you, maybe even come a little bit lower, up, down, and then go there, right? So then you'll be getting taken out. Then you might re-enter down here. You're going to have to recapture the loss of that trade, plus take on more risk, plus take on extra commissions. So often it's better to simply on something like that, and then look for the larger sort of trade, just take a bit more time. Because now you only got to find one or two solid trades as well, rather than entering all the time. But if you've got the right approach, like you're watching this in real time, you've identified this channel, you put that in here, you could even take a tiny risk through here, expecting that to break and hold, and then look up towards this 200. So you've got the moving average there, and then that's also that dump point from Asia earlier today. And then, I mean, that's a 6R right there. That would be a completely sensible trade. So if you look at this structure on the smaller time frame, you could even go as far as down here and still get a 3, right? You can see this little cluster in here, came back down to, bounced off, fell through, climbed right up, looking for that to break. And there you go. Uh, 1 to 200. You mean 1 to 200? What are you meaning, like a 200R? Is that what we're saying? I mean, you pretty much like have to hope you have zero jump on the spread or any kind of flux or something like that, and then no slippage, no nothing. Where are we? Dude, you'd have to keep going. I mean, I'm pretty sure we'd be looking near the all-time highs. There you go. It's 190. Any idea how I can blackmail my sister to buy me a few funded accounts? Look, I'd say your best bet, instead of blackmailing your sister, just ask for a Christmas present. There you go. Ask for a Christmas present for a funded account from your sister. Crypto also saying, can you hold swings on 5% funded account, or do you hold them in your private capital? You can hold swings. So if the first part is can you, yes, you can. What it's going to depend on is, one, the swaps and the carry, and you also have to be careful of spread expansion. And then the similar thing when you're running that kind of stop and you've got a swing trade you've been holding for a couple of days or something, and then you've sort of gotten to this peak point, like you've been running up the stop or something like that, or even if the stop is still right at the base, you're now going to be quite high in equity, right? And then so your daily drawdown is going to be based on the highest point, either equity or balance. So if your equity has come quite high, but then say you've got like a, I don't know, piece of news, jobs data, whatever it might be, and then it comes out poor, somehow turns your trade back the other way, you could, depending on how much profit it's running, sort of take yourself out on that, right? Especially if you're on like, I don't know, hype growth account, right? And you got the 3% daily pause level, you could end up taking yourself out on that based on the liquidity. Now, you know, that's one of the things to consider. Do you have enough flux for something like that, right? Can you keep holding it? Or, you know, you sort of do a slightly shorter swing time frame and then potentially even take portions of profit along the way, right, and scale out. Holding it in your personal account obviously is going to be a bit simpler. You've got more control over how you manage it to a degree, where you're not going to have to be worrying so much about that daily drawdown type level. And especially because if you got more than one swing trade on in the singular account, and then they both sort of pull back, then that can be quite difficult, right? So, okay, sorry. But yeah, so personally, I prefer to hold swings in my personal account, like private capital, personally. But that's just me. And yeah, 8, 13, 21. Yeah, Fibonacci. Yeah, I see. Those guys are used as they add into the clock, but not true because of leap years. Yeah, it's just again basic selection. Humans, like I was saying, it's just simple, right? You got to pick something, and that's how it is. It's like how you have the triple swaps roll over on Wednesday. It's like, who decided Wednesday? It just sort of was Wednesday for a time, and then it just stayed that way. You could have just had it Monday or Friday or something else, but 200R, yeah, I'll retire after that. Yeah. So unbiased trader, if you're saying 0.5% risk on 200R, then yeah, 100% trade right there. There you go. It's a monster. Market maker will call you and about margin call. And yeah, like Akram was saying, yeah, daily loss resets to which one is higher, equity or balance. So yeah, it's all just about sizing the trade correctly, and depending if you're running multiple swings in the same account, and then also how correlated those multiple swings are. Alrighty, so we were talking about gold before. Yeah, I think it's going to be, at the moment, gold looking pretty lackluster for today. We've got somewhat of this triangle wedge type thing forming through here. We're now sort of coming down the bottom side of it. So if this sort of holds, I think we are on track to that 42.35 kind of level. Silver as well, also pretty lackluster at the minute. So, and not to forget that we're going up towards the NFP tonight as well. So I think right now, definitely looking for more downside for gold. I'd only be considering any kind of longs if we broke above the highs in late Asia today. Right? Without that, I wouldn't be trying to speculate long through here. I mean, you could potentially, based on that you do have this level here, and take that, if you just want to accept the risk of loss through that, go back towards that drop point from mid-Asia today. That's a possible idea. How we doing? Welcome, man. How we doing? Trading Lab Vix. How we doing, bro? New to the channel, so welcome, brother. Welcome. And do we check gold charts? Yes, we do. Yes, we do. We can check anything you want at all. So gold at the minute, like I was saying just before, pretty much just trading sideways here since the late Asia or mid-Asia dump, and then since early London start, like we've done nothing, just wafting about here. Definitely still got that tilt to the downside. Right now, we're trying to pressure that lower band again, see if we get the deeper drop. But yeah, that would be my preferred piece for gold, is that move lower. So let me just get rid of this stuff. So I prefer to see that further dip back into the sort of trend line that runs from the all-time highs up through these tops, which have tapped into neatly there. That's also the 200-hour moving average. That would provide a much better entry point overall. Entering the sort of middle section of this range just here, not a big fan of. Right? Yeah, it's not great. Yes, just like Unbiased Trader said, check everything. Yeah, including wheat, sugar, and orange juice, and coffee as well. Don't forget coffee. And what else is there? There's like livestock. We can check, I don't know, carbon futures. Yo, Akash. Good to see you, mate. Good to see you. How we going? We got pretty, it's pretty quiet Tuesday right now, ahead of the Fed, I must say. So I hope you've been well, brother. Yeah, guys, let me know anything else you want me to take a look at, because we are definitely just sort of muddling about right now, ahead of NFP coming up. So what's that now? 3 hours for NFP. So yeah, no surprise there. It's just like a typical Friday, just ahead of NFP. As far as the at the money volatilities, etc. for options, nothing too crazy. These are pretty mid. Dollar yen's definitely a bit more elevated than the rest, but has come back a bit too. So even gold has dropped right back. Silver's definitely quite up at the minute. But yeah, nothing too much to report there. So we got Pedro hanging in the background as well. How we doing, brother? Feel free whenever you want. Cam, can you look at me? Sure thing, man. Sure thing.
What's up, LJ? Good morning, everyone.
How you doing, Pedro? You going well?
Good, all good. Yep. How are you doing?
Yeah, good to hear. Chilling, dude. I'm sweating over here. It's hot.
Is it?
It's really hot. Yeah.
I'm all dressed up, man.
Yeah, I've had aircon blasting the past couple of days, and just it's not even keeping up with it. Yeah. God.
Do you prefer really hot weather, or do you prefer or cold weather? Like if you had to choose
cold.
Extreme, cold?
Yeah, cold for sure. I'm like built for the cold. I don't know. I've got the sort of Scandinavian genes on my mum's side, and then Scottish Irish type thing on my dad's side. And then so I just sort of like heat up as well. You know, I don't sweat much. It takes me a lot to actually get there. So I just like heat up, and yeah, it just feels gross. You know, it's gonna melt and explode or something. So yeah, I'd much prefer the cold any day. I'll happily trade it. I wish it snowed here. It'd be so good.
Yeah, so you need to be moving around. Some people go after the sun. You'll be going after the cold.
Oh yeah.
Looking for winter. Interesting. I agree. Like to be productive when it's too hot, it's terrible. It's just terrible. I struggle a lot. Hot weather is just like summer holidays, and that's it. Just really take it really easy. Otherwise the productivity goes down a lot. Well, when it's cold, as long as you are comfortable at your own home, then it's okay. You can work.
Yeah, that's the thing. Because of all the computers in here, right? Everything's heats up. You know? So it's just it's a sweat box, and it's mainly the humidity here in Australia, right? If it's dry heat, then it's like okay, it gets real humid and death. You know? So
avoid saying that they need to. I think so. I think they should get the copyright of the Pedro. Yeah. I think that would be a great intro, to be honest. I'm kind of disappointed that they still don't have it. But yeah, we'll see. I need to speak with the Fivers to see if they manage to make that up. What about today? Tuesday NFP, which is kind of a rare event on a Tuesday. What is your expectation? What are you looking at? Let's talk about the markets. Most likely I already talked about it today, but I like always to hear your thoughts when I'm here. So let me know.
Yeah, for sure. I think, right now it seems as though we got that slight tilt as far as markets we're actually trading. So slight tilt to the downside for the dollar. We've had euro dollar holding up pretty nice. Pound dollar, of course, we had the data earlier today, and that's still running on. And then we've still got dollar yen gradually sort of drifting towards the downside overall, right? What was that? Someone just released? Was that headline or something? Oh, I just saw a price sort of jump aggressively. But yeah, so as far as the actual payroll, I got no idea, to be honest. I think it'd be very hard to call. I think you'd be sort of just sort of making up whatever, to be honest. Jerome Powell obviously indicated that they and the Fed have sort of seen some other tangential bits of data, which leads them to believe payroll numbers are actually much weaker. Being that we've had the government shutdown, a lot of disruption there. Everyone's back now, but it's also a matter of has all the collection been able to be done correctly, and fully, right? It's going to be a mixed, choppy bag. We also get the retail sales and what's the other piece coming through? Housing starts as well at the same time. So I think it's going to be a bit of a mess, right? So the first knee-jerk reaction could be both ways. It'll probably be whatever the headline number is, of course, and then you'll have a bit of a back and forth with the deeper look into the data. So I must say, normally I love a good NFP or jobs number or whatever and position for it, but today, no idea. It's going to be a bit messy, I think. So,
is there a chance, like, so the Fed projections is that we're going to end up even next year, I think, around the same as we are now, right? Around 4.4 or 4.5%. I think that was the projection from the Fed on last week when they announced. Is there an expectation that if it is high, like, is there any? So basically, my question is: Are we expecting a good news, bad news kind of scenario? Bad news becoming good news, or is actually good news, and bad news are bad news in this case? Because we're looking at 51k. Like, if you have another number higher than 100,000, is that good news? Is that maybe the indices maybe okay, time to go up for this maybe last few days of the year, or not? And that basically confirms that if you do continue to get new or strong data, labor market data, then the Fed's not going to feel any pressure whatsoever to cut rates, which at this point I think is just predicted somewhere in April or something like that to eventually have another rate cut, or then in June.
So I think the majority driver would be the trajectory for rates. So obviously, if we had that high number come through, that's going to get cut right down, at least for now. So I think that you'd see stocks come off in that situation. I think a worse number is overall better for stocks. The knee-jerk piece, potentially get the tap down depending on the severity of just how low it is. But then ultimately, probably slightly to the upside, assuming you price in further cuts. So it has to be enough to price in or warrant further cuts, but not too deep of a labor drop that it's actually perceived as
bad for the economy.
Structural issue. Right?
Yeah.
So I think indices are very difficult in that manner right now. I think they're in kind of that, just like you were saying, that flux state of is good news, or is good news bad news, and vice versa. And we always get that sort of crossover period where they kind of intersect and then flip. I don't think we're quite there yet. I think there'll be some of the other bits in tangent with the jobs data from today. So CPI, PCE, and then also the week-on-week claims. Right? And within the CPI data, I think some of the spending data will be quite important overall for company balance sheets, the health of the whole K-shaped consumer type thing, and that continuing for the time being. So.
All right. Yeah, that is going to be still plenty of data. I think one of the big ones as well is going to be about the Bank of Japan, which can also be a big factor and maybe one of the bigger movers until the end of the year, which at this point is expecting a 25 basis points hike. That's going to be announced on Friday. So, and we have seen the volatility on the end, which eventually could eventually be the bottom on the yen index, kind of maybe the top on the dollar yen, and maybe other yen pairs, which personally.
One sec. I think someone's trying on the door. That's what I was getting to. I was trying to explain that, but it keeps happening. So I think there is. Yeah.
Go ahead. It's the market maker, man. It's the market maker. Market maker is knocking on the on LJ's door. And by trader, I can see that you mentioned that Spotify is at 1990p for 3 months promo. That's interesting. Usually they kind of do £9 or something like that for 3. But actually I'm an Apple user, so I actually have Apple Music, and yeah, I don't know which one is the best, but at this point, I'm with Apple Music on that one. What are you guys looking at, guys? Anything that you are paying attention in the market for today's positioning? From last week, if I recall correctly, on my bias, and I think maybe I'm talking here, I mentioned it on the Portuguese live stream, is that I was looking for the reversals on US indices, NASDAQ, S&P, and so on, which they end up happening on the during last week. Unfortunately, I didn't manage to catch absolutely anything on NASDAQ. Actually, I got just a little bit of a short at around this level, but then the bigger reversals, I never really managed to get anything. They just turned basically as the day was closing. This was the day of the FOMC, and then the day after, basically price also just open or closed and opened then with a big gap, and never really managed to catch anything at the tops, which was a little bit annoying, to be honest. But now I could see eventually even a little bit more of a further move to the downside, or maybe retesting a little bit closer to this next structure. In alignment with that, also, as you guys know, I do like to look at the VIX, and the VIX, in my opinion, actually reacted from a great level that could push price out the VIX to the upside, which means then we could have a little bit of that negative reaction on US indices. So that happened already as well. So maybe eventually VIX could come back a little bit into this level, even manage to take some of these stops. So who knows if we are going to continue to have a little bit more of a move to the upside on the VIX, which could also push a little bit more of a move to the downside on US indices. If any of you trade the NASDAQ, actually I'm curious to know where do you think that NASDAQ could go next. Do you think that this is already maybe the bottom, or if you are looking for price to go a little bit further down, where would that be? And if by any chance you are looking for any shorts, where would you also like to look for those maybe trend continuation setup in here on us? So yeah, feel free to let me know on the chat. One trade that I actually took, it was kind of unfortunate or not, is that I got stopped out on silver, literally just by the pip. This was on Friday, a Friday move, which price just stopped me out, and then just first, yeah, it was a bit of annoying move. Again, I think I explained a little bit in here the type of process, the approach that I like to see, and how this compression, I really like it. Then one of the reasons to start looking for a potential trend here was that we already had this liquidity. I did thought it was maybe enough. Apparently price did end up going one extra leg up in there. I could have maybe tried to re-enter in here. After price actually took these lows, I end up not taking it because, again, price was I don't really have any information on the website, and by the time that actually price was still in here, gold also was a bit strong in that moment, still kind of trading around this level, and maybe price could end up taking a little bit more of a leg up before moving down, but again end up making the move which we after take me out. So it happens to everyone. And it is what it is. Actually, I was happy with the setup, with everything, but unfortunately, I didn't manage to capitalize on it. Yeah, that was one of them. What else am I looking at? I've been tracking also DAX a little bit. Not yet DAX. Yeah, but DAX already kind of reversed as well. And then the dollar. I think the dollar can still move a little bit more to the downside, which means that euro could go higher. I don't think this is still the bottom on the dollar. It doesn't look like. I think the dollar could make a little bit more of a move down. I think price is just literally making still a continuation. We don't have all these lows now in alignment, and I think price could eventually go below that level and maybe close this gap in here, and maybe after that finally find some bullishness or a bit of more strength to the upside. So when I'm looking at these lows, I'm not really convinced this is the bottom, and I'm going to be waiting, especially for today with the NFP and then also services PMI and whatnot. I'm going to be waiting for these lows on the dollar to be taken and then looking for potential turns. But to be honest, I don't really want to be involved in anything above this line. I want to see price going a little bit below it before trying to look for a long. To be honest, I should have an alert already in here. And then if that happens, then when you're looking at the euro dollar, I think the euro dollar as well, it's reacting quite nicely already from these levels, but as you can see, it didn't really manage to gain much momentum to the downside. It kind of just comes back, retested the structure, and then never really managed to create any new low, while we're actually still creating new highs. Again, there's a little bit of a difference in here where actually euro already slightly took this top, so that could be potentially liquidity then for price to move down, while the dollar index hasn't really managed to do that. So dollar index is still kind of holding the same line in there. However, even on the euro, I actually would like to see euro going above this top and maybe getting a little bit closer to that level before moving or before having a little bit of a bigger move. Or even if it go a little bit down, maybe somewhere around here can still hold and price to the upside. So even if you have a move to the downside, I'm still not sure if this is the top. I think eventually price can still go a little bit higher. So we'll see which direction price will go first on the euro dollar. Looking at the euro index, for example, it continues to move to the upside, so it finally kind of broke away from this structure with a little bit of momentum. Every now and then we continue to see a little bit of weakness. I'm not really sure what's going to be the catalyst that eventually is going to move this euro index to the downside. I know it's waiting for the ECB on Thursday or anything like that. But at this point, the euro index continues to be a little bit strong, which continue to push it then the euro dollar and some other euro pairs as well a little bit higher. So when you do have eventually this move on the euro index, that can help the euro dollar to also move to downside. So for example, maybe waiting for price to break this level, then you can maybe feel this towards this level, and then can help euro dollar to move a little bit more to downside. But even from here, price then can just bounce and who knows, resume the move. So we'll see what kind of a move we're going to have in the euro index, but it's kind of waiting. And until this happens as well, the euro dollar is also continuing to get sticky without really managing to go much further down. The pound, the pound also I think could go a little bit higher. The volatility is a bit different. But I think it could go also a little bit more to the upside, getting a little bit closer to this level, if not even eventually just filling all this. And then you are talking about close to 1.355 or something like that on the pound dollar. But let's see. First, we still have this structure in here. I think price could go a little bit higher to take these stops, which we haven't taken yet, and maybe have some kind of reaction. So maybe a new high in here maybe could work on the pound, unless price does want to respect this level. We'll see what will happen. But I would prefer actually if price would just go a little bit higher, at least a little bit higher. Again, I need to set up an alert in here on the pound. What is your take, LJ, on the dollar? Do you see a little bit more bearishness on the dollar, or do you think this is already the bottom and price could go higher?
Yeah, a little bit more bearishness. Sorry about that. Dude, it turns out there's like people in the thing above and they're just banging on the side railing. It's like tripping me out before. It's like, who's here? It's like 8:30 p.m. 8:50 now. Like, who's knocking on the door? So similar deal to you. I was going over it before at the beginning of stream. Looking at a similar deal for the euro as well. So up a little bit further towards this 118 kind of area. I think for like sort of a final push. This kind of 117.30 to 80 or so was my rough expectation for NVIDIA. So I think somewhere in this general cluster is sort of where we wind up. I don't think we're going to go too far one way or the other as far as the dollar overall into the end of the year. I think any of this data will sort of just be flux points, and then we'll find some consolidation type point. And so same deal with the pound, looking up here at about that 135 type area as well. So there's also, I know for today, about 4.9 billion or something worth of options up there also. So definitely seeing slightly more downside for the dollar. Not huge though. Similar to what you mapped out on the Dixie itself. That I think there's a bit more in it to go, but it could be payroll today. That's sort of the final knee-jerk flash in the pan, and then it's kind of buy the rumor, sell the fact, get that out of the way, and it's a bit of sort of profit taking and pretty much just come back and resettle the kind of trading area that we had. But yeah, so that's overall what I'm seeing for the dollar, and just like you were saying with this this piece down here, I think we do have a little bit more downside. Back to some of those. I'll zoom out. Oh god. Oh god. Oh my god.
You have one task, LJ, for the new year. You have to unclutch all your check.
God, this is just everything from the year. Oh my gosh.
Yeah, just take a screenshot of that, frame it, and then come back with a new one.
All right, there we go. That's better. But yeah, so into this where we had the kind of center of this range, right, where we spent quite a lot of time back and forth through. So I think sort of back to the lower base of that portion down here. So it's about that 97, 70 to 50-ish type area, somewhere in there. We'll probably find a bit of a floor, at least near term, and probably going towards. I mean, we've only got one final week towards Christmas, right? So
yeah.
With I need to throw it up as like an NFT or something.
Yeah, and by saying it bounces from Spotify, Amazon, and Apple depending on promo. If no promo, YouTube live channel as background music is relaxing. It's true, man. But I end up getting, again, when you start with a promo, I think I got the iPhone, and then the iPhone gives you like 3 or 6 months Apple Music for free, and then when you at the end of it, you already create your own playlist and everything, and now you don't want to change and go somewhere else. And also when I'm working out, kind of the Apple Music can run on the background of the app that I'm using for workout. So it just plays out nicely. But again, then it's hard to stop it and to move to something else. But I love background music. I'm always with background music. I'm glad LJ actually had some background music right now on the stream, because otherwise I feel like the silence is too loud for me sometimes.
Yeah, the silence is definitely.
Yeah. I always like to have some background. All right, and then he's mentioning about the DAX. So what is the DAX? DAX is making a bias based on 1 hour open candle. It's very profitable. Look into it. So what is the 1 hour open candle? What does that mean when he's mentioning 1 hour open candle?
1 hour open from London, I'm guessing.
Yeah,
DAX did end up through to this point. I think. What was that last night?
Yeah, that was a nice move, and also nice to downside
with Rich. So.
But what's the strategy of the 1 hour open candle? Is it any hour? Is it London open? Is it just a candlestick pattern? That's okay. 9 a.m. to 8 a.m. 8 a.m. to 9 a.m. Okay, 8 a.m. to 9. This is in 15 minutes time frames. So 8 a.m. to 9. Is it what to buy it? Any first hour of any session. All right. So basically, the goal it would be to buy it or sell it, depending on the direction of that candle. Would that be why is my hour starting on 8:15 and not 8?
Yeah, I mean, it's going to be the same principle as New York Open, obviously, right? You get all the flood of orders. They've been stacked up pre-market, market opens, huge dump of trading volume coming right through. So
I was just want to try to see if there was a kind of actually a strategy around it in terms of when to enter, when to exit, like to take advantage of that hour. Like if the candle shapes in like the first 5 minutes or 10 minutes, 15 minutes shape in a specific way, then we can try to trade towards that direction. Yeah.
And yeah, guys, we do have an event. So 2026 prep event for next year on the Monday next week. Right, so you guys can follow the link there, join up, get some little goodies. There's going to be a little starter kit for 2026, some offers, and then I think there's going to be some giveaways for the event as well. We got a huge panel of the pros for you guys to speak, stacked panel. So we have Saul, we got Mickey, we got a bunch of the other guys from Trade the Pool as well. There'll be me, myself, Jonathan, a few of us doing some talks and helping you guys get ready for next year. So some of you guys were asking me about ideas, thoughts for next year, projections, that kind of thing. There'll be a bunch of that covered next Monday. So definitely sign up. Get your little sign up in there. Link is pinned. I'll see you there.
Yeah, it's going to be a good one, guys. So don't miss out. And of course, there's also giveaways and prizes to be announced on that day, if not mistaken. So yeah, take full advantage of it. Yeah. So yeah, and Bias is saying classic candle 1 hour. Look for strong bull bear candle and then make entry on 5 minute chart. Enough said. Fair enough. I know that, for example, I think Tom, the guy that wrote Best Loser Wins. Yeah, exactly. I think he focused a lot on those type of patterns. I think he has almost everything statistically tracked, basically, and he knows every single shape or format of the candles and kind of the probability of price then going into that direction. And that's how he trades. At least that's how he found his own edge in the market. I was looking for those type of patterns, and I think it's around also the London Open. That's why I was asking if there was kind of a specific shape of a candle or something. If it goes first 35 minutes candles go in one direction, and then you do X or the opposite, and so on.
Yeah. Can you guys still hear me? Can you still see me?
Yeah, I can see you.
Oh, okay. I'm going to try to reset. When I was started talking before, and my thing's frozen, so I'll come back in. Just give me a second.
All right. No problem. All right. So someone also mentioned before, Adil Maroc, you said that you managed to get a long on NASDAQ. If you want to share with us, where did you get long from? What is your target? Where is your stop loss? Feel free to let us know, so maybe you can take a look at the trade that you are in and maybe share your own bias. So yeah, feel free to let us know. A pattern that we have seen now recently is basically during the London session, morning session, basically you see a little bit of the US indices going to the upside, but then the bearish move has happened during the US session. So I think that happened already a little bit last week. It happened definitely yesterday. And let's see if today is going to happen or not the same way. Even if today you do have news that can affect a little bit that behavior. But yeah, I'm interested actually to see. Actually, when you're looking at NASDAQ, for example, what key levels are you looking at now? After price finally moved a little bit to the downside last week, what key ranges of structures are you paying attention?
Look, I mean, overall, I don't particularly like the NASDAQ picture as a whole right now. So if I just go and hide everything. Obviously, we had the the tops through here, downdraft. We've now got this sort of rounded out price action coming back up, and we've kind of come down to the middle of this this range. My next point of call would be 24,600 down here, but if we started moving down through here, I wouldn't exactly call that high confidence that that's going to be like a pause point through here. Kind of seeing as though this is actually going to roll off much further, and there's a bunch of levels, down through here to take. Also through that spike low, we did actually get beyond that. So I feel as though we're going to see a return to about 23k next up. This is why I don't like the idea of the Santa rally here. I don't know, the structure just seems to be saying otherwise. And I can't think of any further reasoning as far as the Fed data or the other macro fundamental kind of backdrop of stuff to actually put the throttle on going into the end of the year. We got 1 week of trading left. If it hasn't happened now, is it going to happen by Friday or right? I don't know about that. So I think if anything, we're likely to actually see a bit further downside, and probably end the year somewhere in this 24,400 to 24k type area at the moment. So yeah, I'd prefer sells from a touch higher if you're looking for entry. So similar to the point we had last night that we fell off from, about that 25,400 would have been pretty ideal. So any kind of move a little bit further up, maybe even 25,200, to then establish some kind of short. But I wouldn't be betting on some kind of run to the upside. Similar to what we were talking about with the data and the interpretation of it, of being good news, or good news, bad news, or vice versa. I think it's pretty hard to call exactly how to digest that at this point. So I think it'll be a bit messy, a bit choppy going into year end. Take some chips off the table. Final week of trading, everyone leaves their desk, and that's it.
I was just making a comparison. This is already basically 10%. Yeah, so I was just comparing with where am I? I was just comparing the pattern from the sell-off that we had end of 2021 beginning, and then of course throughout to 2022 until October. And it was around the same time now. Like if you look at when the top was created, it was around also started November, beginning of November, kind of spend a little bit of a few weeks in here, and then it was actually kind of end of December into January when you finally start having this sell-off and eventually price breaking away to the downside from around this range. So actually, in terms of the time of the year that we are having this behavior is kind of similar. Beginning of November, end of October, where we are right now. In terms of the pattern itself, this is a typical reversal pattern that happened around this level with some kind of break of structure, clear fake out of that, and then price just falling through. And this could also lead into, this could also start looking like a little bit of a reversal pattern, because we already actually have a little bit of a break this level. The price went there, also took a little bit of this liquidity, and eventually could continue. If the price actually then ends up breaking these levels, which level did you mention before? 20?
So about 23k. That's the first. Yeah, first point of interest, and then it's 22,300 after that.
Yeah, okay, 22,300 exactly, somewhere around here. And then in that case would take us into how much percentage to the downside? It would be around.
So I think it's like 12% at 23k, and what, 15% downside at
exactly. Yeah, it will take us into somewhere around this range, which who knows if that's going to then end up there or not. But it looks like, just comparing a little bit these two, of course the story is different, the narrative is different, what's going on at this point is slightly different from what it was back then with the inflation. But it's interesting, price-wise or behavior-wise, especially if you end up actually coming a little bit further down and eventually taking these lows. I think it can open the door to many people. I don't really use moving averages in here. I'm not really sure where the 50 moving average or the 100 moving average on the daily time frame is, or even the 200 moving average, because that could also be potentially a point to look at.
The 200 right now on the daily is about 22,770.
Yeah, we can
look
at yours. Where is that one? Okay, it's that one. Okay. Is the yellow one correct?
Yeah.
Yeah. Okay.
Yeah. So that'll be rising. We'll roughly meet that 23K level. So it's whether.
So basically, price at this point is in between those two moving averages, right? It's shorter and the red one, just kind of in a mix between those two.
Yeah. So the blue one's a 50. This gray one here is 10, and then the red is 100. So I mean, if you crack through the 100, we get a hold below the 100. You got that, the wick low through there. Probably some kind of drawdown, retest, collapse.
Yeah, that could be an interesting one. Yeah. So it's going to be something to pay attention, 100% for sure. And then of course the narrative next year. Then it's also depending on who's going to be the head of the Fed or not, and the approach is going to take, and everything in between. Looking at oil, because we saw that Henry actually mentioned that he's looking for a small long position on Brent, and basically Brent is just selling off for the last few days. What is your where do you see that? Where do you see the Brent going to?
So yeah, I believe Brent dipped because we had OPEC calling pause on the supply cuts. Right, so hence more oil continuing to come into the market. They're going to keep printing for the time being, and we've had these lows for some time. We've tested a couple of times. We've managed to keep and hold above that. Right now, we're definitely having a good test at them again. Sorry. So at this point, another fourth test. I would say the momentum is definitely a bit higher, that we could actually get a crack through here. Particularly if any of the data that comes through, if we get some of the weaker payroll type data, that kind of thing, any of the spending data, retail sales today as well, if they come through weaker, that could also be perceived as further weakness from the consumer, their willingness to spend, therefore less is spent on oil, driving around, people more conservative with that. And then, obviously we're in a pretty defined area here, so that's a clear break. You'd be looking somewhere about 45. I think we get capped there. I don't think we drop too much below for the time being, but I don't know. Definitely got downside pressure. Essentially, it's pretty much the same story that we had before, though. We've basically just gone back to that. So there's not really been a new catalyst per se. It's just continuation of what we had. So whether that's enough to actually crack these lows, possibly, I think it'll be a technical break type situation. But yeah, I mean, like you can see through here, like there's been,
just one direction, correct? Just moving to the downside. I do like when I'm looking at the WTI. So I think Henry mentioned Brent, but I think we're looking at WTI in here. I like the price just underneath that. I like price just underneath these lows, so I would like to see actually these lows being taken, and then there's maybe a little bit of a structure there at around 50. Whatever is this, 54, maybe something 54, something like that. That maybe price could bounce, but then I actually like the 41, 42 mark. I think it's even with some kind of volume in there as well, and you have all this structure from the past. That would definitely be a level that I would love to eventually trade from, even if it is just to come back into this level. Maybe the new range is going to be somewhere around here. If you look actually the last time that Trump was the first term of Trump from 2016 to basically 20, this was where oil traded from. Okay, except COVID. Right? Let's ignore COVID. but this was the levels. So this is basically beginning of 2017 when he got in from around 42 to 75, and that's basically where oil also traded from since Trump came back. So this is basically January 2025, and now maybe are going to go back into this exact same range, basically feeling exactly this. Maybe that's what we're going to do now until eventually price may bounce. So maybe within the same pattern almost, with the same prices of oil, which can be interesting. And sometimes the price does tend to sometimes mirror some kind of moves in the future.
Yeah, I mean, you've got the seasonality effect as well. Obviously, it's it's winter, not as much driving going on in those major consumer areas, like the States and everything. As far as the actual narrative picture, like I was saying, nothing's materially changed. Kind of just gone back to what it was. And then there is the other portion to remember that the US is now looking at, and gradually filling up the strategic reserve. So whenever oil is down low right here, and particularly if we do get any kind of further drop, I'm sure they'll buy up a huge amount, right? So that's potentially something that could put a bit of a floor in the price. So that's quite a lot of oil to be bought up there.
Definitely. Yeah, definitely. You can see here, Unbiased Trader is still talking about that approach. Unbiased, send me. I think actually you added me on Discord. So send me a screenshot of that, and I can maybe take a look also at the 4th or 5th of December example, maybe of when I'm not on the stream anymore. But yeah, send me a picture of the setup with an example, and maybe we can take also look at that. Yeah, but it's good. It's good to keep an eye on new strategies and new edges as well. All right. What else? What else are you looking at? We haven't talked about the yen pairs. What is your take? Let me just maybe take a quick look at the yen index. So yen index is really holding these lows at this point. However, there's maybe still a key level to be broken to actually confirm that maybe price is ready to do something like that. Okay, so at this point, at least this stopping here, this structure is important. I think price could be bouncing or could be trading in between this range without giving any clear intention that still wants to go much higher. Actually, could then just resume the move to the downside. Nevertheless, there's been definitely opportunities to try to trade both directions at this point on the yen pairs, where the main benefit at this point in terms of sales has been definitely the dollar yen because of the weak dollar that we have seen in this last week or so. Nevertheless, I think there's still opportunities to, for example, if price comes back into this level, maybe find some more buy orders, and when price does get closer to here, maybe it's going to find some resistance somewhere at around this level. So then how can you take advantage of that? So basically, looking at the dollar yen, I could see potentially even continuation, even though price is starting to slow down. So I'm curious actually how price may react from here. But I could see eventually even dollar yen going a little bit more to the downside from where it is right now. But if price actually starts respecting this level too much, then maybe there's a little bit of a long. So be careful how price will react from here. Unfortunately, I was looking for a long a little bit higher. Price never really get that close to it, just reversed. Again, it depends if the dollar does want to continue to go a little bit lower, like we mentioned. Maybe, of course, then dollar yen can continue to push a little bit more before we have a bounce. For example, a level that maybe I could look for a long to be somewhere around here on dollar yen, around maybe 153. And then the other yen pairs, they have been way more bullish. Aside from Aussie yen has been also moving to the downside quite nicely. But then pound yen is moving to the upside. So we already took that top that we talked about. There is a high probability that price will actually end up taking this top before moving lower, and it can still actually continue to push higher until we actually break some relevant structure. At this point, I haven't seen that structure being broken just yet. And euro yen is finally reached the supply level that I've been talking about on the higher time frame, and this is back like 30 years or something like that. This is 1990s, but it's now finally there, and you're starting to see a little bit of a reaction on the euro yen from this move. In addition to that, you can see that also price had already slowed down a little bit. Now another rally, start breaking some lows, and now basically created this top, and price starting to take slightly low. So I'm going to be curious to continue to look for sales at around this level on the euro yen. I think there's maybe opportunity, even if it's just to fill this range or even go a little bit lower. I think we are going to find some selling pressure at around this level, and also we have the potential increase on the interest rate of 25 basis points from 0.5 to 0.75 from the Bank of Japan on Friday, and so that's going to be, yeah. What is your take, LJ? What are you looking on the ends? Do you think now you have a top on dollar yen? Do you think what are you looking for?
Yeah, so on the daily, so obviously NFP tonight, and then we've got Bank of Japan through this week as well, and then obviously the inflation data, right? So you're going to have that tug and pull of the dollar here, but we can clearly see that, yeah, this there's sort of this trend line sort of running through there, right? If I turn all this on, I got all laser beams. But yeah, so this structure is pretty much the floor. It looks like at this point we do want to eventually crack that. It's just going to be what the specific catalyst is at some point. And then from there, you can see pretty clear dump. I think we even get right down to that 200-day moving average. Ultimately, close that gap we got from was it back in October now?
Oh yeah, definitely.
Yeah, so I think that key level is the wick from was that Friday. So coming in around that 154.30 or so, a breaking close, like convincing break from there. I think that's a very nice swing option as well, all the way down to fill that gap potentially. I'd run stops somewhere about 156.40 or so, with the entry at 154.40. Right now, obviously, that's if you're taking the full swing right down to lows, because that's quite a big stop. So you'd have to, size that appropriately. That or else, obviously, find a lower term structure, and then as that continues to roll on, you pull that stop lower. So you go above one of these daily timeframes, about 50 points or something, and from there 154.40 all the way down to 147.40 or so. You got 700 pips downside. So it's quite juicy. But yeah, I think it's going to depend on how the non-farms come out, and then rolling into Bank of Japan, they should be hiking. They've been pretty clear that they're going to do that, but there's going to be the tangential rhetoric around the hike, what they say in the statement, that kind of thing. So like you were saying, we could get some kind of a dip into here, but that saves us near term and get a short-term bounce before ultimately coming off. And I think it's just going to completely depend on how those numbers come out. If they're forceful enough to, just break the structure, take those levels out, and then drive on, or if we get a sort of more mixed number, people aren't ready to fully pull the trigger, especially ahead of the Bank of Japan, cluster around here, slight pull up, see where that comes out, and then it might be, coming into January to actually push, move on. But yeah, overall downside, I think we're finally ready for the yen appreciation. It's taken some time this year, but I think we're finally getting there.
Yeah, right. I'm glad actually I asked you, because I forgot about that gap on the dollar yen, and if price does indeed start breaking some of these key levels, the downside, I think that can start becoming a natural target for price to eventually move towards to. Of course, it's going to take maybe a few weeks or even a couple of months to get there, but I think there's maybe the potential for that. I really like where dollar yen is already reacting on the left side, so I'm totally happy with where the high was created. And if price just wants to start moving to the downside from where it is right now, I'm more than happy with that. So it could definitely start moving to the downside from here. So I'll be tracking that for sure. And then that maybe could mean that yes, the yen index is finally ready also to start moving to the upside from.
So if we get that perfect combination of slightly weaker jobs, so potentially still puts the rate cuts, on the table, whatever speed or trajectory that's going to be, so long as they're potentially in play, and then obviously we get Bank of Japan, continuing with their more hawkish type rhetoric. That's where you get the perfect combo of the two, and it's 1-2 hit for the dollar yen. So. And then, we've had the JGBs with the rates, which have, gone bonkers this year, whilst the yen itself has pretty much stayed put. So that has to ultimately come back in line just naturally. So, yeah, there you go.
Yeah, that's nice. There was here a comment of Adil. So Adil, I think it was long. And apparently it got long on NASDAQ. Okay, so you got long 24,880, but he's looking already for a swing position where it's going to take us to all-time highs. So basically, I think for him this is the bottom, and price is ready to go all the way, and it's already at break even. Okay, so we already moved the stop loss to break even. Now.
Interesting.
How do you approach this one?
Look, I mean, if you get that kind of entry, you've managed to enter, right by the local lows, right? And if you can take the stop to break even, I mean, fair trade. You're pretty much at a near zero risk type trade. You got commission, tiny bit of commission, tiny bit of slippage if you do get stopped, especially if it's on NFP or something. But that's not a bad idea. Like if you've got that view that we will get some kind of Santa rally, Christmas rally, something like that, I mean, that's a fair entry, right? I would say if we crack below here, like I was saying earlier, I would not be confident in a rally back higher ahead of Christmas. So I would say that pretty firmly establishes the move lower back into the lower 24K type band. Now, the other thing I do see though is, like I was saying, for those shorts, I would prefer to see a move up to 25,300 and then fade it from there. So that's the next question of, I don't know if we'll get the momentum totally to the upside as far as looking at that trade. So somewhere into that level through there, or else up, and a failure just by these highs, right? So another attempt to push a bit further, failure to reclaim the recent local highs from this week, and then coming right off. Right. So, but as far as the trade, if you've got the view on making all-time highs, I mean, that entry point's good. Yeah, that's probably as good as you're going to get, especially coming into final trading week of the year. So,
yeah,
not much more to say about it from me.
Yeah, my point is to be more into like when you are looking for this kind of swing positions, is I think personally I would like to try to find a level or a zone that looks like literally that's a great level for a bottom or a top for price actually to reverse. And I'm not really sure if this looks like a bottom to me. I think this, because sometimes there's maybe the confusion when you're looking at these levels where price can bounce from, and we think that this may be a great level for a bottom, but maybe just a retracement, and then price eventually just continue in the same direction. So maybe a question to be within this market structure, how do you see that this is already kind of price is ready to go all the way to all-time highs from here, and not, for example, just retesting that level that LJ mentioned, maybe around 25,200 or something like that, and eventually just move to the downside. So it's a bit more of managing expectations on the trade instead of trying to constantly shoot for the new moon or kind of to all-time highs, or to just go all the way back to retest swing lows on the weekly time frame. Now, if your analysis on the higher time frame is that actually price is ready to go all the way, fantastic. Maybe price is retesting something that you can look at and that tells you that that's the one. Great. Because otherwise, what's going to happen is that maybe you could benefit maybe from a 2-to-1 or 3-to-1 risk reward now with your entry, and then they're going to end up with a break-even trade because maybe price will just move to downside. And if this happens regularly, then you are leaving a lot of money on the table just to try to catch one of those big swing positions. So this is something that you can look at your own trades, at your data, to see how often actually do you get this type of, especially if this is kind of an approach that you look for regularly, like these big swings, and how often actually do you get them, and how much money are you leaving on the table by constantly trying to get there. If this is not something that you do regularly, and I'm just talking nonsense, so forget about what I'm saying right now. But that would be a little bit of my advice is look a little bit of the data, because it's always good, and we always aim to look for those big trades that to be great. We could take a screenshot, frame them, put them on the wall to show to everyone your piece of art. But sometimes we are trading in here, and the goal is to make money. And depends on how much money actually you're living on this around it.
Yeah, I guess I was taking it in the context of, coming into the end of the year, obviously. I would say this would be my sort of sludge box of support through here. But with the remaining trading days, that's probably going to be your best point to actually get that, a decent entry for some kind of attempt at the highs. So, but yeah, I agree with what you're saying, Pedro. Will, Richard, how are we doing?
Yo! How's it going?
Oh. Going well?
Good. I feel like I have been talking for hours. I am so tired. I'm so worn out.
I feel you, brother. I've been very busy today. I'm
tell me about that.
in the same boat.
Stopped.
You had way less hours of sleep, I think, LJ, didn't you?
Yeah, probably, yeah.
Oh,
It's going to stop next year, I swear.
we all say that.
Next
year, that'll be the year that I chill out and relax and stop working so hard. Never is.
That's the first promise that you just broke.
Yeah. Do not lie to yourself, LJ. We all know that you're going to be working 10x as hard next year as this year.
Probably, but I don't know. I'm going to try at least carve out some rest periods, and yeah, I don't know. I think I have to,
100%, man. Look, you need to look after yourself.
Dying over here. Yeah.
Yeah, look after your body, man. Look, what do you call it? A healthy man has 100 issues or 100 problems. A non-healthy man has one.
Yeah.
So
exactly.
Look after yourself. You've only got one body. Artificial science isn't quite that advanced yet.
Not
yet. Yeah, well, if you're as rich as LJ is, you can just go and source yourself a new body,
Yeah. Like I said, it's the science isn't quite there yet. You may be wealthy enough to.
Seems as though we're running in different circles here, Will. I think LJ's already got him one self-sourced, yeah? It's just one phone call away.
Just a quick phone call. Oh, Frankenstein, what's going on, man?
Oh, man.
Any trades today, guys?
No, not for me. Not yet.
Are you trying to say that you haven't traded in this extremely low volume?
Are you even a trader?
Are you you even a real trader, bro?
I was going to say the only trade I've had today is through here. I was on the euro earlier.
That is actually quite a nice trade. I'll give you that one.
But then that was it. I was actually looking to hold this.
That was pre-news, wasn't it? Yeah, just before pre-news.
Yeah, but then we stalled out there, and then the pound was turning down. So fortunately, I did actually take it just before that.
Yeah, nice.
But yeah, that's the only trade from today.
You
I'm
looking
looking
on EU.
Yeah, so at least I think there seems to be like one more little push.
Yeah,
I was talking about
we
this.
were trying to work that out earlier. We were trying to work out where EU could be wanting to go to. Like GU looks a little bit nicer. There's a few more points on GU we could head up to, but EU we were struggling to find. I think we found one or two points that we actually liked the look of. Other than that, it was just like a bit crap.
Yeah, so I think EU is going to have, just general pull, a bit of a pump, nothing going to stick and then turn down. I think pound will help it up, via that sort of correlation. I got about 135 on the pound. And I was saying before, there's about 4.9 billion or so of option expiries up there for today. So that's quite a draw. On the euro, though, the cluster is different. So there's like 2.5 billion odd down about 117.50. So euro is definitely pricing more just to sit in this sort of general range at the moment. So I think any further push higher will be a bit of a blow off top, and then we rotate back down.
Yeah, nice.
So I don't think it's going to stick.
Yeah, I agree. I could see us dropping after that. I like your view about moving higher, but like you said, I'm glad you said that you don't think it's going to stick, because I fully agree. I don't think we're not going to stick to these highs.
So that's the thing on the Dixie has like another sort of level, just a bit lower as well, and then I think this would be kind of a bounce point from there too. I think Pedro was seeing somewhat similar. Hey, you want to see like slightly lower, just point made on the Dixie?
Nod, Pedro. Yeah.
Pedro.
Yeah, Pedro's listening to music about himself in those headphones. Pedro.
Pedro was in his own world there for a moment. He was.
Yeah, I was reading an email. I have no idea what he was saying.
He's like,
all he heard was. That's all he heard, and he was like, Pedro, and you're like, huh? Yes, by fourth quarter next year.
What
are we talking
about? I agree. Usually I shared with LJ, and I usually tend to see the market a little bit similar, even though he likes more. Actually, he likes drawing as well. So, but his piece of art is a bit more sophisticated than mine. But yeah, usually we kind of agree on at least on the direction where price is eventually going to.
So at least your like bias is the same, I suppose.
Yeah.
The thing is, you quickly had to look at his drawings and be like, yes, I agree. Exactly what.
Yeah, well,
same.
We were saying before, this is like the Dixie from this year. Like, there's just this like laser beam set of stuff going on everywhere. Look at this.
Would you call yourself an organized person, LJ?
Look, this is all lower time frame stuff, and then you go out to the table, it's like chaos.
Oh, what is
this
that?
is all from stream though, right? So like
fair.
My other charts don't actually have all this on.
Mate,
LJ's only an artist when he's in front of people. That's what's happening. Like, I love this. Paint, draw, paint. But when he's at home and he's doing his own thing, he's not on stream. He's very calculated, very precise,
very meticulous,
very clean, straight lines. Here it's just like chaos.
Oh, it's great.
A kid with a crayon in his non-dominant hand.
Yeah, it's like being back at like preschool or something,
Yeah, it's like
like finger paints and stuff.
Yeah, it's like chewing on your tongue while you're like drawing.
Problems in life. I can just draw, do whatever I want.
Yeah, I'm sorry. Who gave LJ a segment to himself? Here you go, LJ. His creative freedom, a chart, and 200 live viewers. Go nuts.
It's Art Attack,
It's fun.
But it's Chart Attack instead.
I was going to say Chart Attack.
Yeah.
I like that. That was good.
And then you have Pedro, who just meticulously draws this perfectly thin white line on his.
Yeah, that's when he's in our world, though. That's when he's concentrating.
Every drawing, even if he's like freehanding, it looks like it's just done with an artist's touch. Just like.
Yeah.
Pedro's
Pedro's like, sorry, what? I
didn't hear it. We spoke at the same time.
I was saying your drawings are very clean.
Yes.
Right? Yeah.
I tried, but my mind is not. So it's kind of drawing is my mind.
Hand and his brain is disassociated from each other. In here, it's absolute chaos, but here it's controlled, fluid motions.
Yeah.
It's the opposite.
It's like going into a hard style D&B club where like everyone's mosh pitting and beating each other up. That's Pedro's mind. Whereas like when he's on the charts, it's all classical music.
Yeah, something like that.
That's it.
Yeah.
I was going to say final trade I am sort of looking at is Aussie dollar as potential turnaround. So I was looking for end of year, actually a bit higher, closer to 67. But we've had the sort of downdraft on the indices, which is sort of keeps knocking Aussie dollar back on any attempts we make higher. So potentially, like if we get euro dollar popping up, pound dollar coming up, and then that kind of rotation back down. Same for Aussie dollar to sort of test the underside through here, up by some of the highs of this sort of trading range, this cluster from Monday. And then possible reversal back towards about 65.50, like that. So that's something I'm keeping an eye on. This is on the hourly here, and we seem pretty happy below the 200-hour moving average now. So see where that goes, but ends up being kind of a somewhat
I could see that happening as long as the top holds. I kind of could see that happening. On New Zealand, I think I would like eventually for price to go a little bit higher. I think you could retrace now, but eventually go higher, and that could fall also on the Aussie, but maybe for next year on.
Yeah, I'm quite bullish on Aussie next year. Like I was saying, I would have thought we'd actually get this further pushed through, but we just, 1 week left.
We're still respecting the high on the left side.
And if we do get the NASDAQ doing, similar thing or dropping further down, or even if, we sort of cap out through here, don't even get anywhere up near these areas, and then just, rotate lower once more. So we'll see.
Yeah. Nice. Yeah, I can see that happening.
Yeah. Guys, I have to go.
Yeah, same.
Whatever is going on in here. Thank you very much. I think I will see you still on Thursday, because then after that next week I'll be taking the week off.
Christmas! It's Christmas, people.
Yeah, I have family coming over, so it's going to be a bit of a mess.
Nice.
A good mess though.
Chaos in the Pedro household.
But yeah, enjoy the live stream, guys. Of course, in the Portuguese, we are still going to do it later on. By the way, you can maybe review with this question, which is the topic of today's live stream. So basically, trying to separate between two types of traders: an offensive trader and a defensive trader. I think maybe we tend to be maybe one more than the other, or maybe are balanced enough. But think about, for example, as a football coach or a football team, where maybe there's a Guardiola that loves to play offensive, and maybe you have a Mourinho that kind of is a bit more of a conservative, more methodologic kind of approach, and pushing that into trading. What kind of trader do you think you are? Or more of a really bit waiting for more confirmations, more defensive, more cautious, or you're always all-in, just click, and whatever, then just rush into it? And maybe you can talk about that a little bit. That's going to be today's topic on the live stream, on the Portuguese one.
Nice.
Yeah. Thank you, guys. Just food for thought.
Yeah. I like it.
Yeah. Thank you, guys. Bye. Have a good one.
All right, man.
Yeah, bro.
See you, Pedro.
See you later, Pedro.
Offensive or defensive trader? Very interesting concept.
That's an interesting topic. I've never even explored the idea of defensive and offensive traders. Well, I suppose I'm quite an offensive trader. I offend a lot of people now and then.
Yeah, but that's just your personality. It's got nothing to do with your trading.
Oh man, I would say I'll have to tap out soon. I got more to get done before I crash. But in like a 2-second summary with that, I would say I'm definitely much better when I just go full offense. Normally it's like errors when make defense or trying to whatever, and normally even when I'm running just pure offense, like I've done all the prior work, so it's not really even. It's not offense in terms of like being rash or something. you've kind of done all the prior work. You got everything set up. Just punch the trigger. The defensive thing is always when I'm done that work and then somehow second guessing something, or just you, dude, lock. You've already done this. You know what? Everything. Okay, go. Go. What are you doing?
Defensive also feels very reactionary as well. Like you're waiting for something to happen and then you're reacting. So you're defending. You can't defend if there's no attack. That kind of like thing. So you're waiting for something to happen, and then you're like, okay.
Yeah. And there's also the thing of like the best offense is a great defense, right? But like that comes down to like the trade management side and like risk. So as long as you've got that in line and you're not stepping outside those parameters, it should therefore be easy to take the offense. You've got you've protected yourself from the kill shot, right?
Yeah.
So you can punch forward.
It's not saying that just because you're offensive, you're not structured.
Yeah.
You have structured offense and a structured defense as well. So the one's not chaos and the other one is control. It's just a viewpoint that's different. But I think it's going to be a very interesting discussion today.
Yeah, that's quite interesting.
Awesome, guys. I will see you tomorrow. Enjoy. And stay safe for NFP. Don't get.
Oh yeah. Oh my god, I didn't know about that. Why is NFP always such stupid days? What's going on there?
I mean, it's just this month, right?
Yeah,
random.
I suppose. Yeah. I knew it was last month. Last month was Wednesday, was it not?
Well, yeah. I mean, yeah. Again, last month, yeah, because of the
because of the shutdown, reopening. Yeah.
It's right. Next year we'll be back to the
back to normal.
First Friday of the month. So
back to full margin Fridays.
Yeah.
The typical. All right, LJ, have a good one, my friend.
Yeah, see you later, bro.
Catch you later.
See you later, man. It's good to see LJ back in his setup. Felt weird watching him on the roof. It's good to see him back in his office.
Nice to see him be back to where he was.
Back to where he belongs in his fantastic setup. Awesome! I'm gonna get some music in here. So don't speak for 10 seconds because every time we speak before when I put the music on, it goes like it's really weird and I don't know what goes on. So okay, we should be good now. Are we good? You look at me like I'm for.
Yeah, no, I think we're good, mate.
Yeah, I think we're good now. You hear like that, and then it kicks in. So yeah, we're all good. Let's have a bit of a catch up with Chatteroony, and we'll have a bit of a catch up with Chat, and then we'll get straight into it. Dude, I kind of want to steal Pedro's Portuguese topic of conversation for us today. I really like the idea of diving into offensive versus defensive trading.
Yeah, I was thinking we just discussed that today. We've got Griff coming in a little bit later. Then we can just
Dude, I forget that Griff comes in.
How can you forget, mate? It's Tuesdays. We get special guests on Tuesdays and Thursdays. We get Griff today, and on Thursday we get Rich. So
yeah, I keep forgetting. Then Griff shows up. I'm like, hi Griff. Yeah.
What you doing here?
Yeah, what are you doing here? Well, it's a Tuesday. Oh, yeah. Yeah, I lose track of days.
All right.
Let's have a quick catch up with Chat. Annie, hi Annie, how you doing? Good to see you in. Hope you're well after this morning. Come on. Welcome, Will and Richard. Yo. Yeah. Hello, Will and Rich from Stephen. Yo, what's good, Stephen? How you doing? Hello, Will and Rich. What's good? Hope you're doing well on this on this terrific Tuesday. What about gold, Richard? Richard, you don't trade gold.
Not today.
Not today.
No, not today.
I'm not
doing anything today.
No, you're saying that completely. Fair, nice. I rate that.
I'm just.
Go on, I do it again. I swear to God.
I'm just looking.
Unbiased Trader is coming out saying, good morning, Rich and Will. Have been skipping your earlier lives. Apologies. It's good market live. Also, I have rejoined the Discord. Dude, don't panic over it, man. Don't stress over it. We have been missing you, though, bro. We have been missing you.
We have been missing you, mate.
Hope that you're all good, Unbiased Trader. No trades besides modern art. Yeah.
Who trades modern art these days in any way?
Prio saying, "Damn, this chart is F scary."
Yeah, the thing about LJ's chart is that to us it looks like chaos. Like
to him, it's just poetry.
To him, it's just he knows exactly why it's there. He can go look back at it and be like, ah, yes, 100% this, 100% that. So LJ's a special guy when it comes to his drawings.
Yeah, Unbiased Trader should have an art competition between the hosts and the audience to vote on the best artwork. Winner gets to be the CEO of the Fivers for a day.
I'll cheat.
No, you can't cheat. No,
I'll straight up cheat.
We all know what you would do, and we all know how that would scream cheating. You cannot go, oh, wifey, draw me something, because everyone would know. They'd take one look at your art and be like, well, that's clearly your wife.
Like, I've been telling everybody this is her stuff. It may as well just be my stuff, and I've been taking
if you were like less of a genuine person and you took ownership over it, then dude, like we'd be all nervous going into that competition. I mean, we all know for a fact it's not you.
Yeah, there's no way, mate. Come on, no.
Infinity,
anyway,
hello guys. Yeah, what's good, Infinity? How you doing? Dude, LJ's a hell of an artist. Like, he's have you seen his artwork, man?
I have. Yeah, I have. That's why I said I'll cheat. Otherwise, there's no way I'm winning.
I'll just go take a photo on my phone and then say that I painted it or something. And I still reckon LJ would somehow beat me.
Dude, if you're not willing to cheat, apparently you don't care enough.
Something like that, yeah. Oh, man. I sent my entry in the Discord. The Fivers Discord, I'm assuming. Awesome stuff. Yeah, yes. I need to have a look at that. Dude, I never go on the Fivers Discord unless I get a ping notification that Rich is going live. Rich is the only one that seems to, like, I seem to get a notification on. It's like, Rich is going live in the Coffee with Traders or whatever it is. I'm like, I'll jump on. But other than that, I'm hardly ever on Discord. You know, I'm never on the Fivers Discord now. Maybe I should start spending a bit more time. Although I did end up going live with Rich on Discord last week, or week before, by accident. I came on to listen to Rich, and I was like, oh, you know, I'm just chilling, you know, settling down, you know, closing everything off for the weekend, and I jumped on the call on the Discord, and I thought I'm just gonna hop on my phone. And then I was like, oh, I got a call coming through, or I was like, oh, I got a text, right? I got to come off my phone onto my PC. But as I came off my phone onto my PC, the PC automatically unmuted my mic. As Rich was saying, if someone wants to come unmute their mic and come join for a chat, then feel free. And then I joined, and the next minute, all I heard was Rich saying, of course, it's Will Davis. How you doing, man? And I was like, hey, Rich. I was like, what's good? So that's the only time I'm ever on the Fivers Discord.
I try and be in the Fivers Discord every day, whether it's Victor's section or it's LJ's section or it's Rich's section. I try and be in all of them. Cannot be in all of them, unfortunately, because there is still some, you know, life happening outside of trading as well that needs to be attended to. But I try and jump in as much as I can. And I would recommend to anybody in the chat right now, if you are a part of the Fivers Discord, go and join in on those sessions. They are worth every second of your time.
They're worth their weight in gold, man.
Yeah,
they're worth their digital
how much gold is worth recently, you know?
Yeah, fair. Yeah, having said that though, January onwards, you know, I've got a lot of life stuff going on in the UK. You know, I've got a lot of stuff personal that I sort out during the day. However, from 7th of Jan or 8th of Jan onwards, I'll try and get my backside into the Discord a little bit more often and come see all the guys when they're doing their workshop calls. I think that'd be super fun because I won't have the UK life admin stuff to go off and do, so I'll have a lot of free time on my hands. So hopefully I'll be able to jump in a little bit more.
That's either a good or a bad thing, mate.
For the first couple of weeks, I'm going to say it's a good thing because I'll go off and I'll explore the city and explore the island and stuff like that. So that's going to be a lot of fun and do some touristy stuff. But then I'll probably get into the thick of working and have my life out there. So I'll probably jump into the Discord and keep you guys company, or you guys can keep me company.
I was referring more to the idea with you having more time on your hands. You already have so little and you're already doing so much. Can you imagine you with more time? You would be twice as busy. That's
yeah,
what I'm saying.
yeah, fair.
Either a good or a bad.
At least I won't have to stay up till 2 o'clock in the morning.
Well, you won't have to, but you will because you want to.
Yeah, no, I know. Yeah, true. True. Yeah, fair.
You're gonna wanna be up until late.
Addiction to work is a dangerous addiction, guys. You know, try and avoid it. Take some time out. As Rich says, go touch some grass. I try and touch as much grass as possible, but it doesn't always work. We got Musas in. Hey, what's good? How you doing? Good to see you in. Guys, if you haven't already, make sure that you smash that like button. Make sure you do subscribe to the channel. We are getting ever so close to the 100, the road to 100K, 100,000 subscribers. What are we up to now?
92.
92K. Bro.
And consider this, not 2 weeks ago we reached 90.
Yeah, I know. Not so long ago, dude, we were at like 87. This was probably about a month ago we were at 87, if that.
Yeah, like I said, it's been growing substantially like this last few months, like really good. Yeah, I remember the 60K.
Amazing. It's been absolutely amazing. So guys, you know, keep that support up. Make sure that you share the live stream. Make sure you share the channel with absolutely everybody. Make sure that you like. First of all, make sure you like this. We've got 80 likes at the moment. Let's see if we can get that up to, let's say 150. Let's say minimum 150 likes. I reckon we can easily do it. Smash that like button, guys, and please subscribe to the channel if you are new here. It does mean a lot to us. And of course, Pooley, question for Will. Looking to buy my niece a present for Christmas. Any recommendations, top uncle?
So this is in reference to a discussion that Will and I had this morning with our morning stream. So we don't have to go into it. I'll save you.
No, I'm not. I'm not gonna go into it. I made myself look like a right bad guy. And
do you want to go into it now?
No.
Okay, so we'll spare everybody the details.
Dug myself a massive hole, made myself look really questionable, and then when I managed to not make myself look questionable, I made myself look like an awful uncle. So
yeah,
no.
I mean, you were stuck between a rock and a hard place, mate.
God, mate, literally. I was stuck between a rock and a sharp place.
Yeah. Crypto Knight asking, are we talking cricket? Not necessarily, but the offensive-defensive stance can be added or can be used for any sport, pretty much. Yeah. So try and do some defensive bowling and some offensive batting.
How would that work? Maybe like you gently roll the bowling ball to the pins instead of like really going for it. I don't know.
It's like being more strategic. So when you come to bowl, instead of you trying to really knock out their middle wicket, you kind of, I don't know, just don't try and hit the person. Where it's offensive bowling is like you're trying to hit the person with the ball every single time. Anyway, yeah. Will?
Yeah. I'm just reading the comments.
You were sitting so still. I thought
I know
that your Wi-Fi has gone down. I was just like,
no, I'm here. I was just trying to work out a comment.
Which comment are you trying to work out?
You will, because you are Will.
Yes.
I don't get it.
You will want to spend a lot of time in the middle of the night working and staying up because
I'm Will. Yeah, fair.
Yes,
That is what Will does. 100%.
Did this comment scramble your brain?
Bro, it did. It actually froze me. I was just frozen. Yo, Griff, what's good, man?
Hi, fellas. Good to see you.
And yourself, mate. Yeah, sorry, Cam. Yeah, no, 100%. Dude, yeah, I will. It's just me in it. Even unbiased trader thought that I was frozen.
Yeah, you were sitting so still, mate. Like, it's ridiculous. Crypto asking, Richard, you were wearing an Akatsuki t-shirt yesterday. Are you into anime? Yes, I did wear an Akatsuki shirt yesterday. Yes, I am into anime.
Do you know the response I got? Do you remember our conversation, when was it? About 2 or 3 months ago. It was me, you... Oh, who else did we talk? Me, you, LJ... We were talking about anime. I can't remember who else. Maybe it was Griff as well.
Yeah, I think so. I remember us having a conversation with LJ.
About getting
I was like, why are all traders, every trader that I know is into anime? And I was like, I'm the only trader that isn't into anime. Like, I've never watched anime. And you guys were recommending animes and, like, you know, if you want to get into anime and try this one, check this one out. I said to my missus, I said to her, CC, you know, the boys have been, like, recommending certain animes. Are there any animes in Cantonese that I can learn to help me with my Cantonese speaking? She goes, please don't. I was just instantly her response, please don't.
There must be no good ones.
I was like, oh, okay. Fair.
I wonder if that's please don't to all anime or just Cantonese anime.
Yeah, like she's like, Japanese anime is great. You can do Japanese anime, but Cantonese, no.
I kind of decided not to explore any further into the please don't.
Yeah.
Okay. So you were like, that seems ominous. I'm not going to explore this any further.
Literally that. Cam saying, William, what would you do without Richard guiding you through this life? It seems like he explains everything. Richard is like, now this is how you wipe your butt.
Papa Richard.
I mean,
dude, I don't know why.
Hard doing, mate. It's been hard doing, Cam. Like,
shut up, Rich.
Daily struggle.
I don't know why. Like, sometimes I'll have a brain fart. Like, I'll have a complete brain freeze because I've got so much going on in my brain, and then when I'm trying to catch up with chat, I'm trying to like sort things out streaming. I've got other stuff to do, and I'm trying to deal with other things that I got going on in my brain. Sometimes I will literally freeze, and literally like Rich thought and like unbiased trader, they were like, "Will, have you just frozen?" Sometimes it just happens. I'll just freeze for a minute, and just nothing will happen. I'll flatline.
There was a question earlier that I think I have missed it. I don't know. Did I miss it now? I'm looking for it. Stephen was asking, Rich and Will, do you guys trade news?
No. I won't even elaborate, just no.
There was another one as well. That was
no, related. Thank you. Griff, are you fluent in Welsh?
I am.
Good man, I like that. I'm not, and it upsets me that I'm not.
You gotta practice, get on Duolingo.
Do they have Welsh on Duolingo? Yeah.
They do. My wife has learnt a little bit of Welsh on Duolingo.
No way.
Yeah.
Is it worth it, Duolingo?
I think you get out of it what you put into it.
Yeah.
I think a lot of people, they'll cheat just to like get
the awards or whatever you call them. Yeah.
Yeah, like for the leaderboards to like protect their lives. But like you gotta fail, and you do pick up quite a lot if you're actually like focused, because you can just do the. Did I disappear?
Hi.
Hi.
See you later, Griff.
Yeah, I think you just get out of it what you put into it. You just got.
Yeah, I agree.
You're going through.
Wouldn't you agree that having conversational training is better than you sitting on your phone and like writing, reading?
I think you got to do both.
I
don't
find
know.
having conversations with people in a different language just absolutely is a game changer. Because
100%.
obviously, let's say in this case, Griff, you're not a Welsh teacher. So you don't have some sort of degree or some sort of university diploma or something that you can use and say, okay, I know all of the syntax, I know all of the semantics, all of the grammar, everything. But you have conversational Welsh, and you can have conversational Welsh and teach someone conversational Welsh. I think that helps a lot more than you sitting on a digital platform trying to learn a language when you have a husband or a wife that actually speaks the language, and they can help you with inflection, they can help you with the proper grammar use, you know.
Okay, you say that. It depends on how you learn. B, it depends on how much, like you said, you put in. So my partner is Cantonese. You know, she's from Hong Kong, so she speaks Cantonese. Now, I was learning Mandarin on Duolingo because it doesn't have Cantonese, and this is when I first, met her, and I didn't really know the difference between Cantonese and Mandarin. So I was like, I'll just learn Chinese, being naive. And then she started explaining that, look, we are all fluent in Mandarin and Cantonese, but technically we speak Cantonese. So I was like, no, I refuse to learn a language that isn't actually the home language of my partner. So I thought, you know what? No, I'm going to learn Cantonese. She's been teaching me Cantonese through conversational form, a bit like what you said, and I've picked up a lot more Cantonese, and my knowledge is still limited, but the knowledge I do have, I can speak it very quickly. I can speak it very punctually. Like my pronunciation's really good for what I do know in Cantonese. However, I get it wrong because I mix it up with Mandarin, which I learned through my phone. And the reason I learned it through the reason I get it mixed up is because when it was in my phone, I was learning different types. I was learning different parts of Mandarin, and I was able to put them together. Whereas what I'm learning through conversational is that conversation in particular. Does that make sense?
Yeah, but that's the thing. It's just like that's how you're going to use the language. You're not going to be writing an essay and then writing.
No, true. No, very true.
Where is the cup? The cup is on the table. You're going to have conversational.
But I think what Duolingo teaches you is using the different ways of speaking. Does that make sense? So, like, if I said, "How are you?" I now know "How are you?" but I don't know "How are you all?" or "How was you?" "How will you be?" Just like different ways of
tenses.
Different tenses and different what's the like pola, polam, polas, polatus, polatus, polant. So what do you call it? Conjugations. So different conjugations. I don't know conjugations in Cantonese, whereas I know conjugations in Mandarin. So that's what Duolingo teaches you, I feel.
Yeah.
Fair.
I mean, I can't really say which is best because I just grew up. So I can't say. But I know I've seen like polyglots, people that can speak several languages. They always say the best way to learn is conversational, and they also say like if you can just learn like with flashcards the most popular 1,000 words, you can technically have 80% of conversation.
Yeah, 100%. Yeah, I like that.
Because the thing is, it's not just the words, but it's the structure. And if you can understand the structure of a language, then it's literally just a memorization of specific words.
The letters and the words.
Associations that they have. It gets a little bit more difficult if you have gender-based words.
Yeah.
Where this
masculine and feminine.
With masculine and the chair is feminine, that kind of like thing.
What is annoying is when you're talking, like, for example, in Spanish, when you're talking about a group of girls, it becomes feminine. The minute one boy enters the topic of conversation, the whole conversation becomes masculine. It's like the masculine, what annoys me is when the masculine and feminine changes. That's frustrating. That I find difficult.
Do you know what is even more frustrating than that? Not knowing why something is masculine. It's the idea. I know some of the Swedish words are like this, whether it's a masculine and a feminine association. But when you like talk about in French as well, French also has masculine and feminine words as well. Like, why is this la or le, you know,
Yeah.
as the enunciation would be. But like,
what defines it as a feminine tone?
why is this table feminine? Why?
Yeah, it doesn't
just
look
is.
like a pimp table to me.
Why? It just is. You know, that kind of like thing. It's just
Yeah.
if there's no like reason for it, like, or at least
I've
the
never-
reason is not like.
I've
like-
never been okay with that either.
doesn't
I've never been okay with because it is. You know, like when my parents used to tell me off or tell me I can't do something, I'm like, why? Because I said so. But that's not an answer. I just hate that. Like, no. What do you mean? Because I said so? No, give me a reason why. Like, educate me on why that this is a bad idea. Don't just say because I said so or because it
And
is.
then your parents follow up by saying, "Do as I say, not as I do."
Yeah, literally. It's like, yeah, but why shouldn't I go jump off this cliff? Like, because you shouldn't. Because I said so. Because. No, why? Because you're gonna die. Oh shit, fair. Now I
Yeah, but
can't. do
then
it
you're gonna
because I
ask
know
why.
why.
Why am I gonna die? Because you're gonna fall a great distance and then you're gonna go splat. Why?
Yeah, at least you're educating me on
Okay,
the
you little
reason for.
Ask me why again.
I remember when I was younger, I found that like if I ask why like 7 times, I always end up with the answer like the universe. Like eventually you just reach like out of space. This, yeah.
Did any of you guys ever read The Hitchhiker's Guide to the Galaxy or even watch the film Hitchhiker's Guide to the
I've
Galaxy?
heard of the book. I didn't know it was a movie, but I've heard of the book. I haven't read it though. I think a friend of
Oh,
mine read it.
I have the book on my phone, on Kindle, and I've watched the film as well. And in the film and in the book, there's the ultimate. What is the meaning of life and everything? And then the answer is 43. It's just okay, but
Why?
why? It's just like
I
don't
mean,
know.
you could argue it's 45 or 90.
42, I remember.
Yeah, it's 42 actually, not 43. You're right.
Yeah.
But if you go and look at it from a Japanese point of view, what is 4 and 2 written down as? I think it's like shi and ni or something like that.
Oh, yeah.
And then but anyway, the
Four.
point is
Four.
42. If you break it up and you make it 4 and 2, in Japanese, it would then be something in the line of shi and ni. And if you put them together, shini, it means death.
Interesting.
So there was just this little idea of what's the meaning of life? It's death. You know, that kind of like, which but the
Really
joke
embarrassing that I can't
of life,
remember what.
it's just like 42. It's just like, explain? Explain give a little bit more
Make it
context.
make sense.
No, that the computer only had all of the time in the universe to come up with this one answer, and it was 42. And then it didn't have any time to extrapolate as to why.
To expand on it.
Thanks for that.
Yeah.
It's
Griff,
Go on.
because it's supposed to show like just you can't answer the biggest, like you can't answer that question, so it's just giving like there's no simple answer to that, you know. And if we want to hear the simple answer, it's gonna be absurd, like 42.
Yes.
It's actually bugging me that I can't remember how to count in Japanese, given that, you know, that's all that I'm spoken to in karate is Japanese. That's all they count in is Japanese.
She.
What's the rest?
I can go. That's it.
Oh, okay. Yeah. we go up to about 12. I think we go up to 12 because that's like the sets and maps that we do.
I remember rock is like 5.
Yeah, Go, Rook, Jew. But then I get it confused with Cantonese again, so it's like.
Yeah, you can't learn too many
Yeah.
languages at once.
We're making it difficult for ourselves. We have almighty Goog that we can ask for it.
Yeah, we got the almighty goggle.
Yeah. Griff, I'm going to ask you a question, and I'll ask you this every single time I see you. Are you in a trade at the moment, mate?
I'm not. No trade since last week, I'm afraid.
Did you take one last week?
No, I mean since you last asked.
Oh, since last asked. Okay, so no change there.
Yeah,
So,
sorry. December is normally very slow, but I'm kind of enjoying taking a chill December. A bunch of people that traded the same strategy as me. I say traded because so many people have stopped after this challenging year. They've moved to different strategies. They would often, in previous years, they'd take December off because every year was very quiet or very or just losing trades. And I've always traded December, and every December I've ever traded has been like -1% or 0%. So maybe I should take December off as well.
I had a 16% December about 3 years ago. Every other December before and after has been just nothing.
Yeah, interesting. I mean, same with the last 2 years. I don't know why. Maybe it'll repeat a third time. But NJ, 2023, NJ had like a 10% reversal. 2024, NJ had a 10% reversal. Literally like December 30th. It was like 1 or 2 days apart both times. So maybe for the third time in a row, we'll get an end of year NJ reversal.
on NJ.
On NJ, yeah, NZDJPY. I can try find it actually.
Can you remember where? Like what time? What was the date?
So the 2024 NJ reversal was on the 30th of December at 8 a.m. And the 2023 NJ reversal was on the 27th of December at 8 a.m. So we've got to keep an eye out for that.
23rd, 2023 going into 2024.
That's right. So literally the very, very end of the year. So you can see right here, here is the 2023 NJ reversal, which made 11% with a trailing stop loss. And then the 2024 NJ reversal is over here. Let me bring this back. And this one with a trailing stop loss made about 10%. So hopefully, and they were nearly exactly 1 year apart. There's just 3 days in it. So watch out. 27th to the 30th of December. Look out for a reversal on NJ.
27th until the 30th. I'm interested in this because it's how we generally trade, technical traders. We tend to focus on patterns. We tend to focus on the idea that there's this repeatableness, you know, to the market.
Yeah.
So if you've noticed something, that sounds interesting to me.
Yeah, very good.
Wow, yeah.
So yeah, hopefully we get that third. I mean, because I've said it now in front of 100 people, we're probably not going to get it happening again this year.
You should have DM'd me privately, mate.
Yeah, I know. It is conditional on getting a channel and then a shift in momentum to break the previous.
Yeah, this is absolute guaranteed. This happens every time.
I mean, 100% strike rate, December NJ reversals as of the last 2 years.
Yeah, I mean, yeah, fair.
They're like 80% win rate trading strategy, and then they have backtested like 3 months. They had
So,
like 3 trades.
Griff, go one step further and kind of explain how you would trade it.
How I would trade it if it appeared.
If it appeared, how
Yes.
would you take it? How would you take that trade?
So let's see what NJ. I mean, NJ could do anything in the next week. If it's forming over around here, we've got a lot of price action that could happen in between. And what I'm looking for is price breaking highs and retracing, ideally not breaking lows, and then just a candle which shows a shift in momentum in the context of the previous candles. So just a bearish candle for this ascending, which is much larger than any of the previous candles in the ascending channel. And then I'm just looking at the previous low, which was broken, and I'm setting a pending order right there for a retrace. And that happens every time in the last 2 years. But yeah, that's for
Last 2 times it happened every time.
Yes, exactly. Every time as of the last 2 years. But yeah, I just realized as well, both times it was a short. So maybe we got to be prepared for an ascending specifically. putting that out there.
I mean, if we just go on 2024's December, so last year's December, there was quite a bit of up and down with large. So on the 9th, we had quite the bullish attempt to push higher. We had quite the bearish attempt starting on the 17th, ending on the 19th, and then from the 19th we took a nice bullish run again, and then kind of slowed down. Still upward, but still like a slow ascent, and then a sudden retracement. So very interesting. Pick up on that. That's very interesting.
This is also good because it's retraced into these areas. Like we've gotten the rejection. We've gotten this shift in momentum as we've broken above these previous major highs. So that's what makes this one particularly good. And that shift in momentum, I mean, it's so clear that's completely taken out the previous candles. Whereas the 2023 one was a little bit different. I don't think it broke above any significant previous levels. It came close. Came very close to breaking above this previous high, but it didn't really. But the ascending is a much clearer. You can see that we're breaking with one candle retracing, wick retrace, and the shift is clear again.
Interestingly enough, on this exact example that you've got now, this is exactly what I'm looking for, but on the daily.
Oh, really?
Daily time frame, but every day.
Yeah, I see.
So it's always the same. It's the idea that if you're looking for reversal going short, you are looking for the same. I'm building. I'm not breaking any lows, and then eventually I have one or two candle patterns that eventually breaks the low or the most recent attempt. Yes, exactly that. And then when we do try and go back up again, it is usually a lower high. So if you go one or two candles forward from this point, or three candles, let's say something like that, your follow-up bullish candles should not attempt to break a new high or make a new high. And that usually to me is a pretty decent signifier that we're going to start changing towards a bearish structure. And you can see it on the 5-minute, the 15-minute, the hourly. I remember you were talking about you were looking at potentially bringing your strategy down from an hourly only down to, I don't know, maybe half hourly or something like that. You were trying to get your strategy a little bit lower time
frequency.
Yeah, just a little higher frequency. This is definitely something that you can look at going down to the lower time frames. It's very much the same.
Yeah, I just saw on Will's chart, I think, on the NAS, it looked like there's a kind of reversal here. You see, there's this descending. I mean, yeah, I think maybe even on the 1 hour, honestly. Yeah, descending. This looks like, I mean, we've broken, I would say this is the previous high based on the way that I look at highs and lows, but that's shown a shift in the context of the previous candles. I wouldn't be surprised if we start getting an uptrend on NQ
Go
now.
over to the 15-minute, just for the sake of interest. And then you'll notice the exact same pattern, but just on the 15. I took this buy this morning with Will on NAS, on our morning stream. Same idea, still goes lower, attempts to break the low, does sweep it, technically, does sweep the low, but the follow-up is that exact box that you just drew now, and then the follow-up attempt to push lower fails, and we have a continuation to try and push higher.
Yeah, perfect continuation.
So just the exact same thing, just on a lower time frame. So obviously you're not going to be putting in, like, I don't know, a trade that's going to last 7 hours, that kind of like thing. But you can get 1 to 2 hours. You can get 2.5 hours, depending on how much volume you get in on that specific one. It's worked well for me so far.
Yeah, you see, these are kind of trending entries, and I've always been a little bit torn about trading indices because it makes the most sense to trade trending entries on indices because Forex symbols don't really trade. They are just like this. I think Forex markets are designed much more for mean reversion, where you're buying, selling here. Whereas my entries, and by the sounds of it, some of your entries as well, we're looking for the beginning of a trend or even a continuation to go higher. And it just makes a lot more sense to trade that on NASDAQ or, the S&P 500. But I've always been a little bit torn to do that, because I feel like I would end up getting similar, if not better, results just buying and holding the indices. So I
tried that. I didn't.
Well, fair enough.
I got knocked out last night.
Yeah, I always just want to buy and hold indices and
Yeah, same, to be fair.
rather than trading them. I could do both, I suppose, but then I may as well just use all that capital for buying and holding, which is why I'm kind of looking at different styles of Forex entries now. But talking about mean reversion, I mean, if you zoom in any of these areas, it might look like an ascending like this. You know what I mean?
Yeah.
So that's I love this reversal entry. It's my favorite. Yeah, the same. I made a good YouTube video about it a while ago. I titled it simple 80% win rate trading strategy, because I went on
in 30 days.
Say again, sorry.
Said how to become profitable in 30 days.
Yeah. I mean, with this entry, maybe.
Yeah.
On AU, I went through all my data, and it was 20 trades over the last 5 years, and it did have an 80% win rate. It's just so low frequency. It's one of these situations again where you have, let me try to do a nice triangle, risk reward, win rate, and frequency. And normally a strategy has 2 and doesn't have 1, and in this case it had very high risk reward, very high win rate, and minimal trade frequency, which is great. That's what this reversal entry seems to give. But yeah, they're just rare, unfortunately.
And I mean, this specific one, was it on currencies or was it on indices? On what were you trading it on?
Forex, yeah. I never trade. I've only ever traded Forex. I don't trade indices, but I'm sure it would work very well on indices based on what we're looking at here. But yeah, I don't know. I want to buy and hold. Do I trade it? I'm not sure.
I mean, okay, so fair enough. Do you buy and hold gold? Do you buy and hold Bitcoin? Or do you... Would you buy and hold gold? Would you rather trade gold and crypto, as an example?
I'd rather buy and hold, but then I suppose you can do both, can't you? I mean, I hold Ethereum, I hold S&P 500, which contains most of the NASDAQ. But yeah, it looks great to trade. I just don't know if I'd want to limit my... I don't know if I'd get better results just holding. Oh, Rich is gone.
He's back.
He's coming back. Here he is.
I thought he lost connection then.
I think we just had a quick reset. I can hear you, Griff. Can you hear me?
Yeah, we can hear you.
We can hear you.
I can't see Will. Will is showing offline.
Yeah, Will's there. I can see Will and hear him.
Oh,
I
that's
can't.
Okay, then. Oh.
Interesting.
No, I can hear Will. There we go. I can see you as well.
Sweet.
So we had a bit of a reset.
I think it was a back end problem, because on the front end I've got the U2 up here. On the front end it's all good.
Good.
Yeah, but remember there is a delay.
Yeah, no, I've refreshed and reset the.
Okay.
Yeah, we're good. We're good. Well, would you guys obviously trade indices, and do you buy and hold them as well? Are you opposed to doing
my swing trading strategy has 3 indices and only 1 Forex pair.
Makes sense.
And it's 90% buys. If anything, 95% buys, and I can be in that trade for a month, 2 months.
Yeah, I'm not opposed to buying and holding an indice I would rather do that than do it with a currency.
100%. I don't think I'd ever buy and hold a currency. I can't see that being...
Doesn't make sense, does it?
No, it doesn't make any sense to, because if you think about it, the job of a currency is to stay stable.
Yeah. I mean, in the idea of trading, like if you're doing CFD trading or if you're doing like options trading, that kind of like stuff, I would much rather, from a trading standpoint, try and buy and hold something even via CFD as well.
Oh yeah, 100%. Yeah. Yeah, I'd much rather. I buy and hold now as technically trading. It's just position trading instead of, it's still CFD trading.
I bought Bitcoin for a long time, and then I haven't touched anything else. I've done a few stocks. I started trading with stocks back during COVID, and that was also buy and hold. So I also have like initial public offerings that I've done before as well, which is also the expectancy 6 to 7 years for you to hold that as well.
Dude, I've always dreamt of holding an IPO. I've never traded an IPO ever. I've always dreamt of it. Do you know why?
One left, one IPO that I'm invested in.
Oh really?
I think I invested in it in 2020. So next year is the 6th year, and here in South Africa you can't get. I can't remember what it's called. It's something like an NWJ12 or something like that. It's got a very specific name, but it's an initial public offering that you can get a serious amount of tax deductible from it. You can almost have the whole. Yeah, you can have the whole IPO investment deducted from your tax, or you hold it for at least 6 years. So it just marginalizes the risk.
Yeah, I suppose if you want to take it out as well, what I quite like about other like investments like that is with stocks and shares, you've got to take out, like you've got to take your money out. Whereas when you compare them to investment vessels like the NAS, the S&P, stuff like that, more times than not, you're taking out the dividend, you're not taking out the investment.
Well, you can have stocks that do pay out dividends.
Oh no, no, of course,
It's not really exclusive.
So. Yeah, no, of course. I think I struggle to speak about stocks. My experience with stocks and shares is highly limited.
Yeah, so shares obviously pays out dividends more often than not, but that is only if the company
does well. Does well, yeah. Earns money.
Yeah.
Yeah, no, of course. Seeing Vinny coming in. It's Vinny. What's good, my man? What's up, Will, Griff, and Rich? How are you doing, bro? Good to see you, Ed. Griff, could you go over the circumstances for your entry in these reversals?
Sure. I mean, so circumstances, I need to see a very clear channel which just contains breaking the highs and retracing, so seeing weakness to the upside, breaking the highs and struggling to move higher, whether that's a wick or a retrace. That's what we want to see. And ideally, you want to see this lack of momentum being sustained. You want to see a continuous struggle to the upside. And then eventually you get a very strong candle down. This is our shift in momentum candle. This is when you're seeing the reversal and we break the previous low. And then I just set a pending order at this previous low, maybe one pip below. And ideally, I want price to trickle back up slowly. I don't want it to come back all at once because that shows a shift back up to the upside. And, maybe we'll continue ascending. So that's only if it's shifted quite far away. In this case, it's probably fine. But yeah, I want to see price retrace without showing me a shift in momentum, tap me in, and then continue moving down. And then for a descending channel, it's just the same, everything I said, but inverted. Yeah,
nice. Yeah, nice.
And generally you can see that quite easily if you remember the idea that higher highs, lower lows is a constant. So if the moment you stop making higher highs or you stop making lower lows, you need to start paying attention. So while it's still making a higher high and it's still making a higher low, you kind of like don't need to worry about it because it's going to stay constantly within that channel until it starts breaking, until it starts showing, okay, this is no longer a higher high. Why is it no longer a higher high? And then you start looking and you start realizing, okay, It's starting to slow down. Momentum is a little bit slower. Candles are a little bit more wicky above and below, no longer like as, solid body candles, progressively pushing up.
Yeah, and I think that's why you need to be, on these smaller time frames. And what I mean by that is like the daily, the weekly, the 4-hourly, all the way down to the 5-minute to the 1-minute. It's because, and that's why leverage is here. That's why we have such leverage, is because the moves on the FX is, like you said, it's range bound. A healthy FX pair is range bound, because that means it's a stable currency. That means it's a stable country. Not often will Euro USD just absolutely tank above all-time highs and just keep going the way like gold would, or the way the S&P would, or the way that NASDAQ would. It just doesn't work like that. That you don't want to see that, because that means that one country, has either gone down the toilet or gone bankrupt. Like something's happened catastrophically in this country where euro is just worth nothing, or maybe the dollar is worth nothing, or the pound is worth nothing, etc. So you want to see, like, if you go onto the monthly time frame or the yearly time frame and then zoom out, you will be able to find that price is within a particular type of range, and it's always within that sort of range. It tends not to trade too far outside it.
Yeah.
Otherwise, it's going to be worrying. And the only times it does trade outside it is maybe war events, natural disasters, catastrophes, debts. So, like, if, for example, if there's heavy debt against another country, stuff like that.
Which is pretty much every country right now.
Which is, and then, if every country is in debt with every other country, then again, it balances the books back out.
Yeah. I was going to say, you can see on pound yesterday on the 15-minute, the exact same thing.
Yeah.
Over here?
So during the, let's say, from the whole of London and New York session. Right where you were now. A little bit towards the left.
Over here?
It starts there and it kind of like worms its way up on the 15-minute, and then eventually it plateaus, makes a peak. You start wicking lower, tries to push up again, fails, and then volumetrically starts pushing lower.
Yeah, I see that. For me, this is where my indicator comes in handy. I use this indicator which marks the previous high or low breaks with like a trail. It's called GT indicator, and I have broken trails here, high broken trail, low broken trail. And for me, because we're...
Okay.
Yeah, GT indicator by Bong Hyun. Here it is.
Recent high low.
Yeah, that's it. And then you just turn on the high broken trail, low broken trail, and then you can see the highs and lows that I use. I used to draw these on manually, so it's really convenient that somebody made an indicator. But yeah, because we broke the lows here, it's kind of showing that we're almost like expanding. That, like, when we're seeing price breaking and retracing on both sides, it normally suggests that price action might go range bound, which is why for me, when I'm looking for a channel, ideally I want as few breaks of the low as possible, because if we see break of the low, then maybe we'll go range bound, which is why over here, this is a pretty, oh god, I went forward. This is a pretty clear example of a reversal. There's only one break of the high. I would set my order, it would go on the inside bar, which would never get reached. But yeah, this is a pretty good reversal example. Oh, nearly got reached. Maybe it will get reached. Anyway, this is the one where we saw it start moving up. Didn't go very far though. Yeah, maybe reversals on the 15-minute.
No, that this thing existed.
I'm old school that way. I still prefer to draw up my ideas. Even if I knew
boxes, I like having a box up with the last swing point to see how the next follow-up can is reacting in accordance to that box.
Yeah, but I think it would stress me out watching an algorithm do that for me. I think I'd have to do it myself. Unless I program the algorithm, unless it's like my inputs on why that box is there, then it's maybe a bit different.
Oh yeah, I know exactly why those lines are there. I spent years moving my highs and lows by myself. Like you can see these highs and lows here.
Yeah.
I would have these, and each time we break a high, I'd update it.
Yeah, but I remember you saying a couple of weeks ago, actually, in that strategy breakdown.
Yeah.
It makes so much sense. I can completely understand why you do it.
Yeah, because sometimes this indicator is wrong, and I'm able to see the high. That's not a high break, or like there's equal highs there. It shouldn't be marking a trail. So yeah, in my case with this indicator, when I've taught people to trade my strategy, I always tell them to not do it. I don't tell them about the indicator. I force them to move the highs and lows manually for some time, and then
I think you've got to move them up and down. You got to do it manually before you automate it, because if you do it automated straight away, then there's room for error. There's room for error because you don't know why. Whereas if you start off doing it manually, then automate it, I think, like you said, for example, with you, it makes your life easier. But you know why it makes your life easier.
The thing is, you get to notice it as it's happening.
Yeah.
Instead of in hindsight, oh, this is where it drew. Obviously, you can learn from where it did that, and you can try and learn to replicate that specific line that it drew 2 days ago on that specific candle. But if you do it in the moment, you get used to seeing it in the moment.
Yeah, you got to have the muscle memory before you can start depending on an indicator.
Yeah,
exactly.
Even the inside bars, like for a while I didn't use an inside bar indicator just so that I could get used to spotting them myself.
Yeah, dude, I still can't spot an inside bar.
Anyway, I've not done this in ages. I'm so glad I don't have to do this anymore. Like you can imagine, it was a good prompt to force me to check the charts every hour, because I'd have to move the highs and lows. I'd come onto my charts and I'd be like, oh god, all the highs and lows are wrong, and I'd adjust them all, and then come back an hour later and they all need adjusting again.
Yeah, I used to do the same when I used to trade pre-sessions or like session volumes and session liquidities. I used to mark out Asia high and low every single morning. Then I'd trade. If there's no trade, I'd come back and I'd mark out London high and lows every single sort of afternoon. Every single day I used to come to the markets, just spend 10-15 minutes at the markets, marking out highs, lows, then I'd do my analysis. Mark out highs, lows, then I'd do my analysis. Then I found an indicator that marks out the sessions for me. So I'm like, I can automatically see it's taken highs, it's taken lows, there's momentum here, momentum there, continuation, volume, etc. Whereas before, like I had to do it manually. I was like, it's not hard, but it's effort. And it's like niggly effort. It's like that.
Yes.
Yeah, it is. And it's like that, I really can't be asked to do this right now. And then you got to like work out, okay, the times. And then, especially if you're on, like I hate doing it on MT. I hate doing it on MT because I'm like, right, okay, what is the server time? Okay, now I need to add 2 hours.
Oh, yeah.
Now I need to go back to like 8 a.m. Now plus 2 hours. So it's 10 a.m. And then I got to draw the lines out. And it's like, dude, this is so much effort. Like this is just boring, and I should be able to go straight into my what do you call it? Straight into my analysis, you know?
Yeah,
I mean, that's
see that.
straight to draw up, because it's simple, it's easy, it's quick. You see what's happening here. You do all of your analysis. Obviously, there might be differences between TradingView and MetaTrader in terms of which broker you're using and which data feed you're using on TradingView as an example. But if you can get one that's near enough, and you're not scalping pip values or tick values, and you're kind of like just going on, okay, I'm going to swing, I need 200 points movement. Few amount of pips difference or pipettes difference is not going to be the end of the world. You literally just do what you need to do here. Okay, cool, I need to take an entry there. Flip over, go to MetaTrader, mark everything ready for your trade, done and dusted.
My mentor had this philosophy that you should never use any indicators ever, just always clean charts. But I feel like if you can automate something, then that's one less thing that you have to do, which frees up more mental capacity to make better decisions. Because if you're like, it's like decision fatigue, you know, no matter how small the decision, if you're having to do all of these little actions, it's more friction, it's more effort, and ultimately you're just going to be taking off, you know, even if you're using up 1% of your trading energy for the day, that's still something that you could
It's waste. It's
It
wasted.
make all the difference. Yeah.
It's wasted energy. So think about like what do you call it? Conserving energy. If you can conserve a small amount of energy 4 times throughout the day, or 5 times, like think about it like a lot size. You know, if you're going to save 0.25 of a lot size risk every single day, or every single however many times throughout that day. Let's say you do it 4 times throughout the day. Boom, that's 1 full lot size. Think about like that compounding effect. You're compounding your energy saving.
Yeah, very true.
I see it like whatever I can do to simplify the trade itself, I will do, because trading is already difficult enough. All of the analysis that you need to do, all of the emotional feelings and psychology aside, all of those things is mental capacity that, you know, it takes up space. That sometimes you get overwhelmed by it and you cannot make a logically well thought out decision because it's full of fluff with all of this extra stuff. If I don't need to analyze what was the high of Tokyo and I have an indicator that literally just says, okay, this little pink box that I have here is Tokyo, that's the high, that's the low, done and dusted. It's simplifying something that is taking up energy that's unnecessary to take up energy.
Yeah.
It can be used for something different. I can use it for a different process. I don't have to use it for my visual process. I can use it for emotional process.
It's also, maybe if you're tired or something, it makes sure that you don't make any mistakes, you know? Yeah, I think having convenient indicators is definitely something that you should pick up once you've been doing it manually for a while. I think it is important to do it manually for some time, because you don't want to be dependent on something that might be wrong or inaccurate. I really like this indicator, which shows the weekly sessions. Just so I know, because ideally you don't really want to be holding trades over the weekend most of the time. And also things like Mondays and Tuesdays, you don't really get a huge amount of price movement quite often. It's quite similar to what you've got, Richard, with your sessions indicator. I have that saved, actually. It's very good. Here it is. Oh no, that's not it. That's definitely not it. What the hell is that? Here it is.
Yeah, I started using this market sessions by Leviathan. That was the one that I used.
I'll tell you what I use. Is it Lux Algo? I think I use them.
I used to use the Lux Algo one, yeah.
What are you using? Leviathan?
Leviathan, yeah, that one.
Leviathan.
That's the one that I've been using.
Lovely.
I quite like yours. You've got quite a nice one. It's quite ergonomic, you know, it looks good on the screen.
I can't remember who it was. There was somebody in chat that suggested the Leviathan one over the Lux Algo one as an example. I just can't remember why.
Yeah, I can't remember why either. That's really interesting, because I like Lux Algo. It's quite a nice. Yeah, it is what it is. It does what it says. You know, it's a sessions, identified sessions, and it's got like the identification on top as well. Because I like to keep. In fact, what I'll do, I'll stop sharing my screen and bring up my trading view screen instead, because I've just brought my sessions up now and you'll be able to see it a little bit better.
The one that I had, I don't really use this, was called Asian Session Range.
Yeah,
Rob Minty.
Yeah. Oh no, I didn't use that one. I used an Asian session range, and then that was before I started trading New York session.
Here's a good comment from MGN saying, an easy way to get around that issue is to set your trading view time zone to match MetaTrader 5.
That's a good... I just did your reset thing.
What do you mean?
Can you guys see me okay?
Yeah, we can see you and hear you.
Yeah, we can see and hear you. You just went...
my whole screen just went...
I guess I'm next.
Yeah, so this is what I use when I'm plotting up. If I want to look at charts, it's just the Lux Algo sessions.
Cool. Yeah.
It's literally
mine's color-coded. Pink, blue, and orange.
I don't like colors. I don't mind them on my MT terminal because, you know, it is what it is. It's not too bad. But on my trading view, I just grays, blacks and whites, super dull, super boring, nothing exciting.
Yeah, so I'll play around with this GT one just for the fun of it, but this one is fine. I literally just use it so that I can see what was the high and what was the low of a specific session, and then when, like for argument's sake, my time 4:30 in the afternoon is the New York Open. So if I want to see what was the whole of New York's movement, then I just kind of and see, okay, cool, if I just hide Tokyo and London, there I get all of New York's stuff. So when I do back testing, as an example, I can go to every point where I was like, I want to do a specific trade for New York, or I'm looking for a specific movement during New York, then I just keep going back looking for all of New York's. So I use it as a tool, not as necessarily as part of the trading plan, but rather just a tool to either do back testing or to minimalize the amount of mental processes that I need to have in place when I'm looking for a certain information. It's just as simple as that. But I really agree with what Griff was saying. Do it manually first. And then if you realize that maybe it's tedious and there is a way to automate it, then automate it, Then I would say after that. But first go be in the trenches, Go and get your feet dirty and your hands dirty, that kind of like thing. Just experience it from the difficult point of view, and then you will really appreciate it when things are simplified for yourself. And you also find a way to simplify it as well. Like you naturally come to a conclusion of like, you know what, this is annoying to me. I can see it, but I want this annoyance to be gone. And then you can use your creative brain and you can start looking for ways in order for you to to simplify it, and then you come up with, I don't know, an indicator or something like that.
One question I have about these sessions indicators is, do they update when the clocks go back? Because I know that there's a period where in the UK the clocks go back, and then everything is back an hour, yeah. And then the US, their clocks go back like a week later. So there's like 1 week a year where everything's wrong. You have to update it manually.
Yeah, so you can go and update the information here manually for yourself. So
Okay, cool.
I like exactly this. I'm on UTC +2. That's my time, and then I just set it exactly to what the this LSE market hours. I use this trading.com's market hours to know when the stock market opens up.
Oh, that's handy.
I use this information. So my time, your time +2 information on the right hand side, the LSE local time information on the left hand side. So very nice. And then I just make sure that this information that's here gets put onto my chart. I did, however, with the most recent changeover with the daylight savings time, because it's a gray folder, Forex Factory, because it's a gray folder, I missed it. Because on the filters, I had the gray folders deselected.
Oh, no.
I didn't know, and I was like, why are we getting sudden volume like crazy, like so much later? And then it turned out I was like,
It's
okay.
particularly dangerous because spread hours are an hour earlier, so you could accidentally hold a trade when spreads widen, which it would be so bad for me anyway, because you'd just be slipped to hell.
Yeah.
It's also pretty annoying that they do that, because if you're back testing, you might not realize, but 6 months of the year, all of your back testing data is off by 1 hour.
Yeah,
and
sometimes
that's something I've just had to accept. Yeah, sometimes even 2. Yeah. I've just had to accept that my back testing data, it's like 1 hour forward, 1 hour back. It's not perfect, but when you have enough data, it's fine.
That's why when it comes to daylight savings time, it's annoying initially, because you're like, okay, hold on, I need to move everything up an hour. But the moment I move it up an hour with the sessions indicator, I'm like, okay, no more worry. I can just carry on.
Yeah, no more worry.
Done and dusted. So my time, London opens up 10 o'clock in the morning, where it used to be 9 o'clock. And Will and I were streaming the one morning at London Open, and Will was still sleeping. And I'm like, "Will, you're late. What's going on here? It's London Open." And then it was 8 o'clock for him and 10 o'clock for me already, and he'd still be sleeping. So that's the biggest issue we've had with the daylight savings time changing.
Funny.
I showed up and there's like half an hour left on the stream, and I thought, Rich, what are you doing? And he was like, dude, like, you're late. And I was like, mate, no, I'm not. It's literally 8 a.m. right now. He's like, nah, no, it's not. I was like, yeah, there is daylight savings. He was like, oh no.
So it's like, yeah, don't worry, I'll be there in 5 minutes. He rocks up. You can see he's like, I'm here, I'm ready. I haven't had coffee yet, mate. Like, he genuinely looked like somebody that just got rocked out of bed by the neighbor saying, listen, somebody's breaking into your house. And he's just like, I have to react. So it was
That's great.
In that moment, it was comical.
Yeah.
I'm like,
it was fun.
I've been streaming an hour on my own. Where the hell is Will?
Thing is, you streamed an hour early as well. That was the issue.
Yeah, he's just like, dude, why are you messaging me so early? And then he also missed the fact that daylight savings time had changed.
The thing is, daylight savings time had changed, but for me being in the UK, it automatically changed on my phone. So like, I was looking at it like normal time. I was like, bro, you're an hour early. It's just, you know, one of those moments where it's like everyone cocks up and it's like, yeah, fair. It was funny, man. It is so funny.
But at least it's twice a year. And it doesn't happen every month.
We get to have an absolute spanner up at least twice a year.
EU seems to be moving at the moment.
Man, I'm not interested in trades today. It's just, they're not looking
All
good.
of this consolidation. Just wick below, wick above, wick more above, finally a break. We're above this high over here. Obviously, this high doesn't matter because it was broken already. So what do we have to go and test? All right.
Your charts are so colourful.
Don't you like colors, mate?
It's very pleasant to look at.
Yeah, it's just look at this nice soothing pink color.
Yeah, to be fair, yeah, Griff isn't as boring as me.
Yeah, I guess I'm in the middle. I've got a little bit of colour, but still mostly black and white.
I mean, fair.
Yeah.
I just love this. This is my favorite color, this blue. So, blue for bullish, black for bearish.
Just before I shoot off, I gotta show you guys what my old charts used to look like. They were absolutely disgusting.
About this a while ago, but you never showed us.
Oh my god, it was shocking.
It was like...
It will take me a little while to find them.
It's okay, I'm just trying to see where potentially Euro can try and go towards.
God, what was I thinking?
So I do not know what's going on with my computer right now, but it is not liking whatever I'm doing.
Is it going?
It's freezing really badly. Like everything's taking 3 hours to move. Like you guys are moving in extra slow motion.
Your RAM, mate.
I think I found the chart. I think I'm sharing it. I've got it available to share anyway. It's not too bad. It's not quite as bad as I remember. But I had pink inside bars, and I don't know what I was thinking. I think I was going for some kind of like neon vaporwave vibe, but it was just
reminds me of my brother's charts.
it's not great. There's not a lot of color coordination, to be honest.
You can show it if you want.
I am sharing it. I think you just got to bring it up.
Yeah, Will, if you don't mind.
Okay, yeah, I'm trying, guys. I'm trying. My
Sorry,
computer's... You know the Little Britain where it's like, computer says no. That's me right now. My computer is saying no.
Don't worry, we've got someone in the background that can help us. We just need to ask Remy.
Yeah, I was gonna say, guys, you're gonna have to ask Remy today. My computer.
One reason that this is particularly bad is because if you look at the inside bars, I've not changed the colors of the wicks. So
Yeah.
the wicks are still the color of the direction of the candle, and there's just no cohesion. It's crazy. I don't know why I thought this looked good. But yeah, it's terrible. If I want to ever look back on my like 2020 backtesting, I've got to look at the ugliest charts.
Later, you're like, ugh.
Damn.
Yeah.
That's nasty.
I think my charts definitely reflect somebody who'd been trading for like 5 months.
Yeah.
Mine is just, it's pretty
you go.
colors. I'm going to be here the whole day. I may as well make it look pretty for myself. And like
you
I
know
said,
what?
I'm surrounded by
When
art.
I first started trading, my charts were so complex. I had like indicators as well as Ichimoku cloud indicator.
Oh,
like,
Ichimoku Cloud.
dude,
Well,
yeah.
that's what I got started with.
Do you know why I had that on as well?
Why?
Just to look cool.
Well, it works. It definitely works.
Just I wanted to be like, I'm a trader now. I'm a finance bro. I'm just gonna have like 3 million indicators on my screen and like all sorts. So,
You
yeah,
never
it was
played
just-
a game called
it was
Fable.
chaos. How I read it, I'll never know. Like I look back on like screenshots now.
You never played a game called Fable.
So again,
Love Fable.
Yeah, so there's a
but
wandering
no, I've never
trader.
heard it.
The wandering trader goes like, I'm a trader. That's exactly what I heard now when you were like, oh, well, I'm a trader, so... And they all wear flamboyant colors. So, yeah, makes sense.
I've got this little mini. I've got to go. But yeah, I'm gonna be replaying Fables pretty soon. I've played Fable 1, Fable 2, Fable 3, and I've got this little mini PC which can emulate up to like Xbox games, and I'm gonna get Fable 1 on it.
Wait, so do you have a mini PC?
You don't
I've got
don't-
another mini PC. Hang on, I can unplug
How
it.
do you find
have
a
the
mini?
edition for Fable 1 on Steam. You can get it. On
Yeah.
Steam. Anniversary edition.
Yeah, how do you find the mini PC?
It's on Amazon. This one's called the SER5, and I'm like emulating every console on it from like before 2007. It's awesome.
Oh, dude.
In fact, it can even do some Nintendo Switch games. Anyway, I gotta go. Bye.
Yeah.
See you
Bye,
soon. Bye, guys.
All right, well, we're gonna need your screen, mate.
You have my screen now. Okay,
No,
yeah.
Griff's screen is up.
Yeah, I just meant I am sharing it. Right?
Thank you. Really.
Yeah, I didn't know if I was sharing my screen or not.
What a very we're in, we're out. I couldn't believe that Griff was such a big fan of Fable. I'm a massive fan of Fable.
I never heard of it. Dude, like I told you guys, I'm a dying.
Dude, it's British comedy.
I
British-
am dinosaur.
Oh, dude. Okay, I
I was one of those kids that lived outdoors, you know? Like, I never saw TV.
You get to play as a hero. And every decision that you make has visually a change on your person. So if you make a less savory decision, then you start getting little horns or you start getting scales. And if you do a very pure decision, you start glowing, get a little halo above your head. Fable. It is a role-playing game where you play as the titular hero. Yeah, exactly. Dubakor, Google knows everything. Oh man, I think I'm gonna play that now this holiday season. I'll start again with Fable 1 and then work my way through Fable 2. Didn't like Fable 3 all that much.
No, didn't fancy Fable 3. I'm a talk like I know what I'm talking about. Oh, really? I enjoyed it. Really enjoyed it. It's such a good game.
It's got the quintessential British humor, mate.
Can be some good British humor.
I love British humor.
It's a bit backwards, but it's funny. It's a bit.
It's a bit dry.
Yeah.
Somebody asked earlier about the news events today.
News. We've got news coming in 25 minutes time. We've got a lot of news coming out in 25 minutes time. Let me share my screen.
The average hourly earnings month on month for the US. This is all US news. We've got the core retail sales month on month, non-farm employment change, the retail sales month on month, unemployment rate, manufacturing PMI, and the flash services PMI. So these are all proper market movers. Proper.
These are big news.
I personally don't trade red folder news. So if there's a red folder news that's coming out, and especially if it's a US one, like for arguments like unemployment, non-farm employment changes, the manufacturing PMI, I stay well clear of the market. So I'm not going to trade anything, and I'll most probably not trade again today. This morning's trade that we had on stream, that was my last trade for today.
You took a nice win as well. It was a really nice profit.
Yeah.
I've had nothing today. I could have had gold. That would have been nice. But it was just too big.
Griff saying, Rich, it's actually my wife that's a huge Fable fan. She made me play all three in like 1 month. I really enjoyed Fable Anniversary Edition, and others are all basically just copy-paste. Yeah.
I find that with sequels, though. Sequels are always just copy-paste with slightly different, storyline.
It's not often that you have the sequel being better than the prequel. Generally, the first installment of something is generally the best. It's usually the one that garners the most, like, let's say, nostalgia.
Yeah.
However, I am fully on the stance that for Fable, the two best ones was 1 and 2, and 2 was better than 1.
Interesting.
I believe that
it's a bit different with video games, I suppose, especially when it comes to like graphics, motion, and movement, stuff like that. That can improve over time, but usually the storyline tends to, unless they can have the ability to differ. I don't know with Fable, but if they can have Fable 1 storyline, Fable 2 complete different storyline, then the games can definitely improve, or the movies can definitely improve. It's when they try and follow the storyline.
Yeah, like a continuation.
Yeah. I find that's when sequels go downhill.
Yeah, so role-playing games is my niche. That's my area. I love role-playing games. Like specifically like the CR, like custom role-playing games, CRPGs. Pen and paper RPG, we do role-playing like every Sunday. We don't do any more all that much, but the thing about a role-playing game is that it's narrative. So it's story-driven. And then if you have a story that's really good, engaging, and captivating, you can have whatever graphics it has. Like for argument's sake, Sam just mentioned one now, Monkey Island. So the Monkey Island series is very old. Like it's all the way back into DOS that you would like pre-Windows. You would have Monkey Island. There's obviously many more of them, but the Monkey Island games were also one of my favorites because it's purely the same comedic, story-driven game, but just not graphically. You know, it's very, very subdued in terms of its graphics.
Yeah. I've not heard of it.
Enoch Boateng's asking, can you apply fixed range volume to a supply and demand strategy? You can.
Yeah, you can apply anything to any form of strategy. You just got to find what works for you. If you like volume strategies, then dude, volume with supply and demand is completely okay. It's just a matter of finding where the volume is and how that works when it comes to supply and demand. Again, it's all relative to you. You know, if you manage to find a way to implement something that's completely unorthodox, like if you manage to work out, I don't know. Like, I can't even come out with some completely bizarre, unorthodox strategy implementations because, again, it's all relative. But if you manage to work out how to use Fibonacci with a Fibonacci pullback with reversal and do like an anti-Fibonacci reversal, that's completely okay also, because, you know, other people may look at you like you're a wailing hooligan, but, you know, if it works for you, that's all that matters. And that, if that's, because like what Griff said earlier, and all the other guys have said, the goal is to make money. Oh no, that may have been Pedro actually. I think Pedro said that. The goal is to make the goal is to make money in the market, not to look pretty and not to go along with what people say and not to agree or disagree with people. The goal is simply make money. So if you have a really backwards, bizarre way of making money in the market, so be it. And that's all I had to say about Vietnam.
That's all I got to say about that.
Yeah, Vietnam.
Yeah, I think you can definitely incorporate multiple ideas. Like in this case, you're talking about the fixed range volume. A fixed range is obviously you're taking a specific point and then you're looking at where price may potentially come back to. So you're looking for points of concern, you're looking for points of interest, usually based around the idea that there was a lot of orders in this area specifically. So the way that we use volume on, let's say for argument's sake, trading view is not the same as tick volume, or is not the same as actual volume, like what you would have if you were at the brokerage itself and where they get their data from. We get kind of like an after effect volume. It's not entirely the same. But the point still stands that the way that we see volume on our charts is how many points of price was in a bar, or points of price was at, or how many times price came back to a certain point within a range. So that is the difference between our volume and the volume of, argument's sake, the CME, where there's actual trading volume where entry prices, close prices, bid prices, and all of that stuff. It's a little bit different. We're seeing all of the movement in a range. So between 2 points, we're seeing all of the movements in between. It's not necessary to say that price was actually at that point. It's just to say that price kind of dwindled between point A and point B on a candle. It's not to say that it was exactly 0.74 on gold and then 0.73, that kind of like thing. There might be 0.74 and then 0.7. And then trading view fills in that gap and makes it a line. Anyway, when it comes to supply and demand, obviously you're looking at areas where there was like volumetric movement out of that specific point. And then if you have a volume profile that you're dragging over that point, you'll see that may not necessarily have a lot of POIs in that specific area where it changed. But if you go down to the lower time frame, then it will start, okay, there was a little bit more volume in this area now because it's based on every candle. I don't know if this is making sense, but you can find a way to work around it.
Yeah, no, absolutely. Truth be told, maybe it made sense. I don't know, I wasn't really listening. I was more interested in what's going on between GU and EU. I actually prefer, even though we were complimenting GU earlier and saying it's a nicer mover, I prefer the look of EU. How interesting is that?
But I mean, still, even though like EU's only just started breaking out, well, it started breaking out about an hour and a half ago, where GU has been broke out at London Open. So
yeah, true that. Yeah, yeah, fair.
GU might be considered as overextended at this point.
Yeah, I don't think I wouldn't want to trade GU underneath the 1 hour time frame right now, just because of the way it's moved.
I wouldn't trade anything right now. We're so close to the news. It's just
true. I know, gold is nice, but
gold's gonna move, mate. It's gonna move.
Yeah. Give it 16 minutes. You know, I'll because I got to shoot pretty sharpish at past. I'm gonna sit for the news because I want to see what's going to happen with these large impact newses. these large impact news events. But once the news comes out, I think gold is going to really move. And once it moves, then I'll tank off with gold. Get it? Tank off. I'm gonna ride.
Nice. I hope it flies to the sky. In which case, you'll be flying out of here.
Oh.
Anyway, some use the full moon buy. So if you can find something that works for you, there is no one that can say it is wrong or right. Except the way that you wrote right. That is quite wrong. I'm joking, mate.
Your strategy is wrong.
Yeah, when it comes to strategies and whatnot, I don't think that there's particularly a right or wrong way to it. There's a right and wrong approach. When it comes
yours,
to
my friend, is wrong.
Yes, except will, in which case you're always wrong.
Am I right?
You are right. No, you can make pretty much any strategy work. It's just kind of like the thing of your approach is going to be more important than the actual strategy. The strategy just forms part of... Sorry, my voice just broke there for a second.
Mine's been doing that all morning. I think I'm going down with a bit of a cold because my voice has been like... It's like hitting puberty all over again. I'm like, oh god, what's going on?
Anyway, the approach I think is more important. It's how you build the strategy, what information you look for, when you try and get that information, what time frame you use, how you build it up, your psychology, all of those things to me plays a larger role than just the strategy itself. Just the when do I buy, when do I sell, when do I close a trade. It's the culmination and not just the single thing.
Yeah, it's the whole thing. A bit like that triangle that Griff drew out earlier on. So if we get our, see if we can what? Let's see if we can go like this. Oh, science!
Science, mathematics, mate.
Fair maths. You took. Why won't it let me do it again? Oh no, let me do it from up here. I'm a bloody genius. There we go. So a bit like this triangle that Griff was talking about earlier on. So it all goes the same, risk reward up here, you got frequency down here, and then you got win rate down here. So when it comes to understanding that it all has to work within each other, you've got to remember psychology, consistency, plan, strategy, risk management, whatever. Once you start realizing like approach into your strategy execution, and strategy data. And then inside you've got the psychology, the confidence, you've got all that stuff, but it's held in by executing the strategy, data backing the strategy up, and the actual strategy approach, which was what Richard's just talking about now. Yeah, absolutely. We've got 10, 13 minutes. Quick maths. Also, it was quite interesting. You were talking about like the universe and maths of the universe. Do you know what baffled me was Fibonacci's theory?
The golden ratio.
Yeah, especially if you look into nature, I didn't realize this, but trees grow at 90 or 45 degree angles. There's Fibonacci maths in absolutely everything in nature.
Well, it's the golden ratio. So the golden ratio is what we know as the Fibonacci, and you can view it in geometry, the geometry of nature. So it's everywhere you can find it, and that's where it's from.
When I first learned about Fibonacci, God, this tickled me. I was trading, and then I was learning about Fibonacci back in school, and I was like, "Oh, who cares about Fibonacci? What the hell? What even is Fibonacci?" I was like, "Screw Fibonacci! It's full of crap. We don't need to know about this. He's rubbish. Screw Fibonacci. I don't care." I love Fibonacci. He was one of the most Fibonacci sequences, Fibonacci retrace. Just the Fibonacci was the whole reason I'm profitable right now. And it made
shell.
Yeah.
Fibonacci.
That is Fibonacci. I know. Bonkers, mate. And like the more I matured and grew up, the more I started realizing that, wow, I really was a numpty. Like, I was an idiot back in school, because had I gone back to school now, I'd have been so much more passionate about maths because of what I've been taught in trading, because of what I have taught myself in trading and what I've learned in trading, and just in general life as I've grown up into an adult. I look at myself and I was like, Will, why didn't you just concentrate in maths, man? Like, you're actually quite passionate about this stuff.
I wouldn't say I'm passionate about maths. I just feel like I am decent enough with it and I can do mental arithmetic quite quickly. I don't always have to write it down. So
I think that's the difference, though, is I think I'm passionate about it because I'm so crap at it. Like, mental arithmetic, I'm pretty good at until you put me on the spot. You ask me what's 2 + 2 on the spot and I'll come out with like 17.
yeah, you're not wrong. It is 17.
I'll just panic, and like my brother will say to me, he'd be like, just chill out and just think about it for a minute. I'm like, no, I don't know what's going on. Like, my brain will just overload, and
it's just memory.
Yeah, I know.
When you look at like a times table, you can go and physically sit and think, okay, what is 10? Well, 10 is too easy. What is 9? 9 is also too easy. What is 8? 8 is too easy. The thing is, when you go and look at this number times this number will equal that number, you know?
Yeah.
It's literally just memory. So if you know that 9 times 3 is 27, then whenever you see 9 times 3, you immediately
just
go
know it's 27. And like, the thing is,
you
it
don't
took
have
me years
to do the
to
maths.
get
You don't have to go 9 plus 9 plus 9, or go 10 plus 10 plus 10 minus 3. You don't have to actually do the calculation. You can just derive it from memory.
Yeah, like back in school, we used to have
I do my maths just from memory.
Yeah, my brother's the same. My dad's the same. My dad, his mental maths is quicker than a calculator. I've actually tested him. Like, we've done tests where I've gone on a calculator and he's done maths, mental arithmetic, and he has sometimes beaten me to punching in the numbers on a calculator. It's bonkers. Like, my brother and my dad are very intelligent when it comes to the mental arithmetic. I am rubbish. We used to have like maths tests back in school, and you would have like a hierarchy, like a leaderboard on who would finish. I think it was anything from the 1 times table up to the 12 times table, and you'd have to do the entire lot, and you'd have to do it as quick as possible. And that used to give me the biggest anxiety in the world, because like I said, I was an idiot back in school. I didn't concentrate. I thought I was too cool. I was just one of those kids that just not the kid that you'd want your kid hanging out with. Bad influence, sort of messing about, mucking about sort of kid. I would hate maths. Like, I'd hate the times table. The day of the times table felt like execution day for me.
It's not bad, mate.
No, it's not. That's my point. Like, now, I wish I concentrated, because now, who knows where I would have been with I would have been as good as my brother and my dad.
Hold on a second. You do know that you can literally start now.
No, dude, I have. No, that's my point. Is like, I'm starting now, not when I was 7, not when I was 10, not when I was 12.
Sometimes you need to, like, regret not doing something and then get yourself to do that thing.
Yeah, no, 100%. Like, even like Sudokus and all now, it's just anything where I can try and use my brain. Like, even like word searches like Scrabble. Dude, you put me on the spot and I'll forget how to spell my own name. Because putting my brain under mental pressure sometimes, like when it came to trying to draw back memory, just reminded me of school, and I used to hate it.
Dude, you're talking about that. The other day, somebody was like, how do you spell your surname? Over the phone. And I was like, B-U-T-T. No, that's not right.
I've only got one T.
Sorry, it's B-U-1-T. L-E-R.
Well, I know. The thing is, we have these moments, and that's what I mean. Like, people say, "Oh, I got to be so smart as a trader." It helps. But you don't have to be smart. If anything, trading will teach you to be smart, and it won't literally teach you. It won't educate you, but what it will do is it'll teach you to be passionate about data, teach you to be passionate about analytics, and teach you to be passionate about numbers. Now I love numbers. the one thing I hate about numbers is whether there's a minus sign in front of them or not. You know, or what color they are, whether they're blue or red or green or red. I hate red numbers, and I hate minus signs.
Association. It's by association. You don't like it because of what it means. So
but I love numbers now.
I've lost money.
Yeah, exactly. Whereas, like, if you could teach little Will, like back when I was 13, Will, we're going to teach you finance. Dude, I would have got an A* in maths. Straight up. I would have gotten an A* because it was. I found what I was passionate about. I just found it too late. Or not too late, because it's never too late. You know,
mate. If you went back in time and tried to emulate the passion you have now for it back then, it wouldn't have worked.
No,
because you needed to learn certain life lessons back then that eventually led to you coming to the conclusions that you have now. That's why you don't live in hindsight. Never look behind you and say, "Ooh, I wish I knew back then what I know now." Yeah, you're not the same person as you were back then. You needed to learn certain life lessons back then. Before, it's like my wife and I had a discussion like this many years ago, where it was like, you know what? I wish that I met you earlier in my life. And I just went up, no, I don't wish that I met you earlier.
Yeah. I'm so glad
How can you say that? I was like, well, first and foremost, you would not have liked me back then because I was this kind of person, and I needed to hit rock bottom, and I needed to experience certain things, and then make the conscious decision to change my life or to adapt certain things about my life in order for me to become the person I am today, which you then liked. So,
yeah, man. Like Cece, like she was in just now. I don't know if she's still watching. I have met Cece at the best time in my life because I'm a much better person. You know, I couldn't dream about meeting Cece 5 years ago.
I don't know. There's a niece out there that might just Elite 7046 Euro USD buy or sell. We are
buy full margin buy in 3.5.
3 minutes away from very high impact news. I would not do either.
I'd full margin buy.
Dude, this person Elite is going to go and do exactly that, and then is going to lose whatever account they have or whatever money they have, and then they're going to come back to you.
Yeah, but then they won't ask. They won't ask that question again, though, will they? They won't ask buy or sell again, will they?
No, that's the thing. People will, because they don't want to learn on their own how to do it. They want people to tell them what to do, so that the ownership of that decision is not on them. It's on someone else.
Hang on. With the fivers, you get 2 minutes before news, don't you? Or was it 3 minutes?
2 minutes.
2 minutes. Guys, you got 1 minute to full margin buy on gold. Quick. This is exactly what
financial advice.
First, exactly what I would do.
Secondly, we are not advocating for anybody to trade full margin on news events. He is a troll.
This is exactly what I would do right now. This is exactly what I would do. I would full margin buy right now. Can you not see? This is exactly what I've done. Look at my open trades right now. Full margin buy. Straight up. Guys, do it. If you haven't already, it's too late. Otherwise, you're going to blow your account anyway. I mean, screw it. You may as well give it a go. You know, there's a good chance your account's going to blow if you full margin buy on gold.
You can be the little devil on the shoulder. I will be the little angel on the shoulder. Don't do it. Don't.
Joe, what would be good is if we could swap. Instead of like you being under me, we're like on opposite corners of the chart.
Okay.
And if we could like instead of
I've got this blue light. I also have a red one.
Let me go red.
I also have a red one. You turn yours red. I'll have mine blue.
There you go.
There we go. There we go. I'll be the nice guy.
It looks like my P&L.
It looks like one of my bearish candles.
Yeah. It's like my account stuff.
Samacho is saying the spread is gonna be massive. Yes.
Do you know Mario, one thing I do panic about watching high impact news?
Combination. Talking to the ones looking for signals, yeah. The only way you learn is by experiencing it yourself, making the decision yourself. If you take ownership of that decision, you will learn to make better decisions if there's a negative outcome.
Yeah.
So just take ownership of the decision. It's your decision to make. Don't leave it to somebody else asking them for signals, because then you'll just turn around and say, yeah, but it's because Will told me to buy and sell. Take responsibility for the decisions that you make.
100%. Right, guys, I'm gonna shoot off. I've got to jump into a quick meeting, so thank you very much for joining. Stay safe during news events. Do not do as I said. I was only joking. These are entertainment purposes only, although you would actually be in profit if you full margin bought on gold, because it is going up. So, bosh, buy my signals right now. £100,000 a month. Guys, I shall see you El Mañana. Thank you very much, guys. I shall see you all tomorrow. Take care. Have a great rest of the day.
Cheers, Will. Go away. Okay, now that we have that terrible decision maker out of the way, let's see what news is going to do. We have the news coming out, or came out. Let's have a look-see. Oh, there we go. All of it is out except for the flash and flash services and manufacturing's PMI. We have the unemployment rate that is slightly worse, according to this, 4.5 versus 4.6. Retail sales is 0 with the 0.1 previous forecast. Non-farm employment change is actually improved, but not by much. We had the previous one of 119. Today's forecast was 51. It ended up being 64, which is actually kind of good. It's not that bad. The hourly average earnings has dropped as well, and then the core retail sales has also seen. So it's a little bit across the board. Good news, bad news, good news, bad news. Let's see what the impact is. On gold, it seems as though we are pushing a little bit more bullishly. Let's have a look at what the DXY has done. The DXY has dropped. So this is definitely a little bit more negative for the US as well, or for the US specifically. If we have a look at the NASDAQ is wicked higher. So it seems as though it's not bad for the NASDAQ, but it should be good for the S&P then as well. So S&P is also starting to pick up. But remember, this is all still the news event itself still playing out. So there's still a lot of trades that's being activated basically now. You're going to have massive changes in the swaps. Not swaps. The spread. Gold spread is actually not that bad. There it starts. Personally, I would still wait for it to decide what it wants to do afterwards. So usually what I would do is I would wait for, if this is the 15-minute candle as an example, news being this candle, I would wait to see after a pullback and a continuation before I decide to get in. I will not get in on this candle, because something that can happen is from this point, it can literally just start pushing lower as you start getting a pile up of sells in this area. So personally, I would just wait. Slippage, thank you very much, Ham. The word slipped my mind. So if there's decent spread, as the spread increases, you will start getting a little bit more slippage. As the volatility picks up, there's not enough, or they will, your trade will be entered at the closest price to your entry point. And sometimes it can be up over here, it can be down over there, depending on what the volatility was in that moment. So the spread itself, not the spread, the slippage is exactly that. It's the difference. Okay, let's have a look-see. Gold is still climbing. Okay, so let's have a look at gold overall. So this is on the 4-hourly. I had a few boxes here that I had marked up. Just areas that I wanted to see broken or at least tested. This one, this was the majority of the move for the last like 2 weeks or so. So from the beginning of the month of December, we had this real struggle to try and decide on a direction. So this was the high point, this was the low point down here, and we were kind of like just hopping between that the whole time. So if you look at this one and you pull it all the way through, that was basically the high that got tested once and then broken through and then retested over here and then pushed off of. So establishment, test, breakthrough, retest. And my idea was, if price in this case did not make a new high, which it didn't over here, there was the likelihood that we were going to try and test this area yet again. So we potentially going from consolidation, breakout, consolidation. That was the idea that I had with gold, bar the news. So the news has now come out, pushing gold a little bit higher. Not as volumetric as I thought it would be. Okay, so this is just a point of interest, so I'm just going to move this out of the way. And this one as well. Just try and clean up the charts ever so slightly. This was a low swing, no longer applicable. This is now the most applicable area. This is on the hourly. If we go down to the 30 minute, you'll see that there was a little bit of indecision here. You basically have this 30-minute swing point. Not swing point, base, my apologies. That got tested. So as price is pushing lower, this area over here was the last time on the 30-minute at least where price or buyers tried to break this downward push. They would try to buy up into the higher price points, but failed. So this tends to act like an area where price comes back to try and buy up again. So price kind of like moves up into an area trying to emulate what it had done previously, which was to buy through it. So if price comes back to it, sometimes what happens is it doesn't have the same reaction as it did here by pushing lower. It actually reacts off of it and starts pushing higher. So that's what you had here, and now we're coming back to this point. Alternatively, you can look at any point where the last candle was basically used to push price lower. Now, obviously, this was today's price. If I go down to the 15-minute, there was an attempt to push price a little bit higher. You had equal highs within this base area. So that's your equal high right there. And you have the lows of the day, which is basically down here. I'm just going to use that. And that was broken through, but kind of consolidated in. So no real attempt to push price lower. Same thing here. Price pushed lower, but when it had the opportunity to try and push deeper into the, the lower points, like let's say around 4,250, that kind of idea, it didn't. It kind of got stuck in this area, and that's where it stayed until we get the breakout now. And the breakout is now to the next area, which will most probably disrespect. Try and push higher above this one, may disrespect it, but this is the overarching area first that needs to be disrespected for price to go higher. So I think, given that we have so much price action over here, buys and sells, indecision, price needs to convincingly either break through, come and test the highs of yesterday, or alternatively break through this as well and then come and test all-time highs, which is quite a ways back. Now, you already had a singular reaction off of the highs of yesterday, and so this is the highs of yesterday, and it had already tested it once and then started pushing lower. The only good thing I would say about this is the fact that it didn't create a new low by testing yesterday's lows. So if it does push through, or we at least get follow-up, so pushes higher, kind of like this, this is the very first area that's going to be tested, and it's the very first area where we have a decision point. Are we going to break through this decision point, or are we going to just wick into it and then start pushing lower from that point? So with gold, this is one scenario, it dwindles up to it. Another scenario is the potential that from where it is right now, it just fails and we start pushing lower, which I don't really think that is really all that possible. If you look at today's low and you pull it back all the way to what was this, Friday's low point, not the low point itself, but like the last point before price started to push bullishly, this is where we reacted. That very, very last candle on the 15-minute specifically. So I know there's a lot of drawings on here right now, but the idea is this makes sense that we slowed down in this area and now we're starting to push away from it. So it makes a little bit more sense to me to have the potential for the highs to be retested and potentially broken through. Maybe not necessarily today, but the news that we've had hasn't really pushed the price all that much, in my opinion. So I think that there's a potential for price to go higher. We've got somebody in the background. I hope he's had a good day. I hope he passed his exam. Have you had lunch yet? You can always go and have lunch quickly.
Hey, what's up?
What's up, Jonathan?
How are you?
I seem to be better than you. You look stressed.
I'm tired. I'm tired, you know, just got back from what's up everyone? Welcome. Not welcome. Welcome myself, I guess. But hey everyone, I hope you had a good day. A good stream. So I just got back from the CMT2 test. 4 hours, a lot of questions. Like almost 200 questions, so it's a lot of...
Do you have to physically write it, or is it like computer-based that you get to type it out?
It's computer and it's multiple choice questions. But it's mostly multiple choice, but there's just a few things that I want you to do. I can't really share a lot of the details. I'm not allowed to share details, but it's difficult. This one was difficult. The first one was kind of difficult, but this one was definitely more difficult, I would say. Definitely more difficult.
Was it more difficult because you think that they went into more in-depth questions, or do you think it was more difficult just because of the sheer amount of information that you needed to retain?
I think it's more, well, it's twice the length. So the first one is 2 hour, and then the second one is 4 hour. So that's difficult because you get to be like, because after the first 2 hours you get a break, and then it's 2 more hours, and you get tired. You easily get tired, and I didn't have time for lunch or anything, so it's a little bit energy draining. A
little bit deprived.
But then also I think yeah, and I think also one of the reasons is there's so much going on with other stuff that I haven't really had too much time to study. I think if I did take the time to study more, it would have been easily. I think it would have been easily done, but I've read maybe, I think on average, maybe an hour. I tried to read an hour when I go to bed. I've done that for like, I think it's four months now, but I haven't really gone and really sat down and had like the notebook and started writing everything out and doing like proper studying. I've been mostly reading and trying to memorize what I'm reading. And when you're studying for something like this, you want to put it into practice as well. Read something and then you want to put it into practice and on the charts, and really understand how you're using the concepts. And then also, of course, writing down some things and then when I'm done with the test now, I see that I have like 200 messages on WhatsApp that I gotta go through. Yeah,
I can tell you one of them is not from me.
That's insane. It's a lot of messages. So how's the stream been today? What have you guys been up to?
We've been talking a whole load of nonsense, to be dead honest with you. We were all waiting for the news to play out. We were struggling a little bit with I wouldn't say direction, but more the convicted moves. All of the market was waiting for the news to come out. News has come out like as you arrived, basically. This is EU. EU has made this massive wick above and then started pushing a little bit lower. The news itself...
NFT today, right?
Yeah, the news itself was a little bit across the board. Unemployment rate was slightly worse, but the non-farm employment change was slightly better. Core retail sales was slightly better, but average hourly earnings was slightly worse. So it's just a little bit across the board. If you look at gold, you'll see that gold is not really doing crazy movements, to previous, let's say, NFP days. It is pushing or trying to push bullishly. I do have a few areas here. I know there's a lot of colors on my screen here, but areas where previous reactions of the price trying to push up, slowed down here in this 2,270-ish range. Started pushing a little bit bullishly prior to the news. News has made a bullish candle. But it's rejected off of this high point of the Tokyo high, or the daily high, let's rather say. So just waiting for news. I think I'm done trading for the day anyway. I did get a NAS trade this morning. So I got a buy in this section down here where price failed. It broke lower and then started. I don't know why it did that. And then it started to push up, making a base. And then I took a trade in this section over here. But other than that, it's been quiet.
Right, yeah, I'm gonna just go through the news here, see if I can find anything interesting happening. So the US non-farm payroll was 64K, and then we had the October numbers as well, I guess, because the government was closed around that time. It says the US payrolls revised down 33K combined over August and September. So I will, if I can pull off my screen, see if we can find anything interesting here.
Yeah, so we have flash manufacturing PMI and the services PMI in about an hour from now. So
yeah,
I'm just done trading for today. I don't trade news, so it's a no thank you from my side.
Just give me a second.
No problem. On the 5-minute, gold has come into this high point of the day. 3-wick rejection, big wicks. I don't know yet if it's going to start pushing. I don't think it's going to start pushing bearishly from here. I think we're just waiting for a follow-up of the price that we had now. I think the market has reacted. Now we're just waiting for it to decide it's done reacting, and now the market wants to carry on going higher on gold.
So I'm gonna look at the trades that I have open here, see if there's any changes. Hopefully it doesn't look very good because I'm long all of these. So let's see, AD and CD. All right, it's not much of a change. Daily still recovering nicely, so that's good. Gold is that's good. Bullish day on gold, definitely. I thought we were gonna get more downside here, but I do think today and the next few days on gold is probably gonna be bearish. I don't think we're gonna. Well, I think we're gonna close this weekly candle bearish on gold. Probably come down and hit 1,225, something like that. Close the week bearish and then continue bullish, but that's just whatever can happen. It's speculating there. Euro GBP, oh, that's a big move to the downside. Had almost, and this is one of the reason why I'm not quick at securing my trades. So I got my stop loss right here, and a lot of people were probably put the stop, to break even when we were up here, because that's above
1.15.
about 1 hour. Yeah. So a lot of people, they move stops to entry at 1 hour, but I don't move stops to entry or secure the trade based on R or based on where price is relative to my entry, but it's more about where price is relative to the trend. And if you look at the 4 hour here, we're retesting that trend line quite nicely from the upside as the support. There's a lot of volatility coming in from the NFP. We should see a mean reverting move here based to, I think if we're going to get more downside, at least we're going to come up and test maybe the 0.618 here before continuing lower. But I'm betting on a recovery here. And then we got CAD CHF. I opened this one yesterday and I added to the position and reduced my stop loss on this one because you can see the double bottom formation here is quite obvious, and if you're taking the measured move on that, it comes up to like that level right here. So I want to take profit a little bit earlier on this one, and because of that also saw an opportunity to reduce the risk on this, as I don't think price should come lower here. The best point of having the stop loss for this one is probably going to be in, well, look at that one, that's weird. I have an AI that types in what I'm saying, so if I press this one right here, I can say something randomly and then it's gonna
say something randomly.
Well, do something then. It should. Yeah. Weird. Anyway, so I'm gonna have to remove that little window I have here. Okay, so I think best stop loss placement is actually below that one. So am I making a mistake here? Maybe. I don't think I am though, because you have you can clearly see like
CHF, yeah?
Yeah, CAD CHF. You can clearly see how you do have that rounded bottom. You have, compressed volatility. Volatility picks up again to the downside and then finds that support. And, volatility is going to pick up once this compression ends. And looking at the trend and the general move, I think it's going to be to the upside. If we break down here, it's probably going to break lower anyway. So I think having the stop where I have it is still decent, I would say. Looking at USD/JPY, we do have that bearish development here throughout the day.
Sorry, where did you say was your stop on CAD CHF?
My stop on CAD CHF is 57.39.7, so 57.40, about there.
I think it's good.
Yeah, I think so as well. It's below support, and it's below a level that price is holding. So I think it's fine.
Even on the hourly, it looks good, because I have an area here around about 57.58, 57.51. And we've recently reacted off of which one is this? 57.62, 57.56. We've had 2 reactions off of that area, so I think you're good on the hourly.
Yeah, on the hourly?
Yeah,
I think so
on the hourly. Yeah.
Yeah,
it
I
looks
think it's
good.
I think it is good.
I mean, you don't need my trading advice whatsoever. You are a fantastic trader, so I'm just agreeing with what you're saying based on what I'm seeing.
But I like how, especially when it comes to like discretionary trading, it is interesting to hear other traders' opinions. Definitely, it definitely is.
I love when he says J or G. Are you referring to Jonathan?
Probably, yeah. Because I do say, I've learned to say Lamborghini, Lamborghini now. I don't say Lamborghini. I say Lamborghini, and I think that's because of that.
Because of the way that you announced the G.
Yeah. I think that's him. He likes commenting on the way I speak, which is no problem. No problem. I'm sure you are wonderful at English.
Yeah, like we're all native speakers, mate. Come on.
Yeah.
I mean, you don't want to hear me start saying, you know, words, G words.
Right.
I forgot. You don't want to start hearing me saying that. So.
Oh man. Okay. I have to just send a message. Maybe you can switch over to your screen. I'm just gonna do that. Maybe you can show something. We have a question here. I'm not serious. I'm not serious, man. I'm not, you know me. But and that was to this comment, obviously. But
yeah, we just checking.
Gold buy or sell, and then what? The event on the 22nd. We're doing a big event on the 22nd. There's a link in the description, so go there and sign up. There's gonna be I'm gonna be one of the guests. We're gonna have a lot of people. We're gonna have the CEO of Trader Paul. We're gonna have the CEO of the Fivers sharing some. I'm not gonna say insider secrets, but some pretty good stuff that you would want to get your hands on. We're gonna have some really interesting giveaways. $2 million in total in giveaways, so that's pretty cool. And we're gonna have I think the founder, maybe the CEO of Trendspider as well, coming on, and it's gonna be really cool. So the 22nd of December, which is next
Monday.
Whoa, next Monday. Nice.
It is.
It's also Monday. My birthday on Sunday, so you can also come in and you can celebrate my birthday. That would be pretty cool.
But they have to bring you cake and gifts.
Chicken.
I'll
take chicken.
What a weird cake.
Bring a chicken.
With gravy as a frosting.
Just chicken, man. I'll do the rest. Just get me a chicken, a live one, and then I'll take care of the rest.
Yeah.
Right. Let's take a look at the gold.
Yeah. I had a look at as well, just quickly at this event. There's going to be so many people that's going to have a segment to speak, like genuine industry leaders in their fields. It is pretty cool. I think it's awesome. I'm going to be watching that on Monday as well. So definitely. Gold, yes. Gold itself, I feel like there is the potential for us to come and test the highs of yesterday. This top section up over here. When we had the opportunity to try and break lower now with the news, it just didn't. And on top of that, we have this area of consolidation here on the left-hand side, which was from the 11th of December. After we had a nice push up, then a little bit of consolidation, a reaction out of it. We came back into it. We just wick below this area of consolidation. If this is the whole area, basically. Let's make it consolidation. We had a break of the consolidation, a retest, and then a slow dredge up towards the top. We kind of had a bit of consolidation near the top of Friday's highs, started pushing lower yet again, and then just kind of like slowly working our way down. So we kind of stuck between these two ranges as we are speaking. So these two areas, I'm just going to remove that one. So this point over here, the high point of Friday, and the low point of Friday, we're kind of like just stuck in this range at the moment. I would want to see gold break through the highs of today to come and test the highs of Friday before I would say, yes, there's a potential for us to push higher into the all-time highs. But I can also see price fail to break into Friday's highs and then start pushing lower, and then potentially come and start aiming for, what was this, Thursday's lows as an example. I don't think that we're going to see price lower than 4,200 anytime soon. I just don't see it, purely because purely because we've had, like, for multiple let's not say 4,200, let's say 4,170. I don't really see us dropping lower than that. But it's only because we've had multiple days from the 1st of this month, from December, from the 1st of December, price kind of like just hopping in this area, a little bit of indecision, but at no point did it really push lower. So if we do come back down, I don't think that this area is going to I think this area is going to hold, to be dead honest with you. It just seems like the reaction that we've had now from Thursday and Friday coming out of this area was strong enough when we had an opportunity to push back into it on Friday afternoon during the New York session, that we came and tested the highs of that from the 1st of December's high point. On the 1st of December, the high was 4,264, and that's where we came to test on Friday, last week Friday, when we had that sell-off. So I don't see it breaking through this bottom section at all. I think there's a higher likelihood for us to come and test the all-time highs and potentially create new all-time highs than there is for us to come and test down here 4,170, 4,180-ish. But that's just my opinion. That's what I'm thinking. I don't think we're going to break lower than this.
Well, I think gold can easily. I mean, if we look at the past, let me switch over to mine. If we look at past price action, I mean, going from. This is just one candle. Obviously, something happened here. I can't remember what. But if we look at, I don't think we had any super obvious like macro development that should have taken price, 6% lower, because the overall overall foundation was still bullish when this happened. So if we take this move that people didn't really care about at the time, and gold didn't really get back to people's radar until we had that bounce and really started pushing higher from the high here, a move like that's going to take us down to 4.1k, and I'm not going to say that that's impossible at all. I think it's highly unlikely if we're in the bull market that we're going to get that move to the downside, but it's still quite likely that we're going to at least break down to 4.2. I mean, it's very possible, because if you've watched this from the daily perspective, I can remove that setup so it's going to be a little bit more clear. Now, if you watch it from the hourly perspective, it's going to be like, oh shit, that's a range here, and then you have a massive move to the upside, and it's consolidating up here. And if you watch it from this perspective, it's like that's a huge move all the way down here, taking out that whole range. It's a big move. It's a lot of price action here. There's going to be a lot of ground to be covered. But then you look at the daily and you kind of zoom out, and you're now looking at this as the same range, and then the move down here becomes nothing. So
it doesn't seem as big.
Yeah, exactly. So I think it's a good practice to zoom out sometimes and kind of get a feeling for the big picture. Looking at the 1 hour, I'm kind of thinking, where is price going to move today? And today, I don't see a reason why gold is going to move outside this range. We did have NFP though, so we did have NFP around, when was it? Here, now. I believe. Yeah, so right now. So this move that we're getting now, you could say is part of that NFP move. So maybe we'll, push up here, range highs, but I don't think we need a catalyst to really push us higher, and maybe that was the NFP. We'll see what happens, but daily range probably gonna stay a bit confined here. Maybe we'll see.
If you look at the daily and you go look back at the all-time highs where we had those, that massive sell-off, leading into that was very volumetric. It was very strong leading into it. We had days upon days of absolute rallies, pushing price higher and higher and higher and higher. And recently, it's way more subdued when compared to the previous time where we reached all-time highs. And I think that's what I'm kind of basing mine on, is that it is moving up, but it's not with the same vigor, it's not with the same intention, it's a little bit slowed. And then the question then follows, okay, if it's not moving up at the same pace as it did when it reached all-time highs a few weeks ago, is it going to have the same drop-off that it had a few weeks ago if we reach the same point? And that's kind of like where in my mind I'm kind of like battling with, are we going to have the same reaction? Because we're not having the same reaction going up as we did previously, and it's just like a comparison that I'm trying to make. And then wondering if it does happen, what first needs to be broken. So, and that's where I'm like, I don't think the 4,170 point, that's kind of like the break point for me. If it does break through that, then I'm like, okay, by all means, we're probably going to push lower from there. But if we don't, then I can't really see it being the same reaction, because we're not reacting the same currently, is what I'm trying to say.
Yeah, I think it makes sense, because you can look at it and say, if something has been moving up quickly with strong momentum, it's going to fall quicker and with stronger momentum, right? So, and that's usually the case. You have this saying that, the bulls take the stairs and the bears jump out the window. Yeah. You have the bulls. If the bulls are absolutely going crazy and is running up along these stairs, you see that the fall is quite quick, and it's a heavy fall. And if we look at this move, we can kind of encapsulate this move here. So from these 2 points, we basically have one move starting here and ending here. That's basically just one move. And what I mean by one move is, in a trend, you have, let's say in like a normal Elliott wave thing, you have 1, 2, 3, 4, 5. And each of these moves is an isolated move. So if this would be an Elliott wave, for example, is taking that as an example, an impulse wave on an Elliott would be 1, 2, 3, 4, 5. And we do the same on gold, it would basically be just 1,
Yeah, 2 came down a little bit. Okay.
So, but then if we look at this on this one, I'm not doing any Elliott wave counts at all. I'm just using it as an example. But here we have 1, 2, and then arguably 3, 4, 5, or 1, 2, 3. And what we get with that structure is we have a range which turns into support, and then another range which turns into support. But there's no support here. The support on the daily is here. So it's basically free fall straight down when we do reach that top. And in this structure here, we do have multiple support levels below, with a very strong one being around 4,200. So there is a very strong support below, which even if we do have a sharp correction from this high, we should establish a level above. And if we don't do that, it's going to be very clear invalidation levels. So I do think that it's not a bad thing that gold is recovering slowly, but I wouldn't say that in a normal case, this is not a slow recovery. It's a fairly strong momentum move anyway, even though we're not getting just a straight line to the upside.
Yeah. But I mean, it's all relative. It's all relative to what we've seen previously. If you had to do a comparison, then obviously it's not nearly as strong, but it doesn't mean that it's not strong. It's still a strong recovery.
Yeah.
Yeah, it's just by the means of how it was. Are you getting a call?
No, I'm just getting messages again. Lots of messages. Okay, I gotta well, let me mute you for a second. Mute for 1 hour. Oh, I love that feature.
I have our Discord also muted for like 3 hours, and then I mute Will as well sometimes, because he has a tendency of, while I'm on screen, he sends me a message on Discord, and then it pops up on my main screen, and then everybody can read the absolute nonsense that Will sends me. So I do have to mute him sometimes. But I guess it's a hazard of the industry. being on stream. You can't have people see your specific information.
Well, that's why we share the window and not the screen.
I just share the screen because it's a little bit easier for me.
Right. Okay.
Then I can jump between my live account that I trade for the stream and then the trading view as well. Otherwise, I have to.
It is better, but it's kind of like having a phone without a case, right? So
yes, that's true. Then I have to wrap my phone in something to prevent it from getting knocked and chipped, and that is just the mute button. I have to mute Will. Oh, they actually in our Discord group they actually did a screen capture of a message that Will sent while on stream, and everybody saw it. It was hilarious. Anyway, you were about to ask.
Yeah, we have a question here. So you trade only daily chart? Yes, I've transitioned into looking at the daily mostly, and it's been very rewarding. From well, I don't know if it's been more rewarding, but it's been less stressful and just overall a better experience for me. Now TradingView is not loading, unfortunately, so I'm stuck at on the hourly, I think, here. Not sure what is happening. Oh, there we go. Okay. No, so I do check the daily, and what I like about the daily time frame is I don't really know how to describe it, but I feel like it's close to the true market, if you will. Because whatever we humans we live within the cycle of a day, right? So if you look at the New York session, if you look at you compress the whole New York session, and whenever the Americans start trading until when they stop trading, and you just look at that piece of information, it's going to give you a lot of valuable information of the sentiment from when the people wake up till end of the day, right? And that to me is important. How did the market participant feel about this market today? Looking at the 1 hour, you can get information of like, okay, how are the market participants feeling for this hour and the last hour on hourly basis. You can look at the closing price, the opening and the closing price of a hourly candle, and you can get an idea of what the behavior of the market participant were for that specific hour. But it's not really telling me the big picture. Now the big picture is on the daily, because then I can look at what was the sentiment for each of these days. You can look at the daily, for example. Okay, what happened here? Something significant happened on the 5th of September, that Friday, on CAD CHF when we broke down. And if I see this same pattern on the 1 hour, it's not going to be as significant, because it's only going to show me that a particular combination of traders within that very hour did something so the price broke down. But when you look at the daily, you're basically getting the whole day with everyone that participated in that whole day, which is much more convenient. And then if you think about it, if you only base your trading on the close of the daily candle, you can basically ignore the current candle. So every chart you look at is going to look like this. You know, you're going to put yourself in the mind of ignoring the current daily candle, because all you really care about is the closing price of the daily candle, which has not happened yet on the daily candle. So whatever is printing on today's candle has no significance to the way I'm trading at all. And when you think in that terms, in that term, you can remove all the FOMO, you can remove all the fear, and you can remove all the emotions that comes with volatility and moving prices. And as long as you have a wide range of a wide room for error when it comes to stop loss placement and that sort of thing, it's much easier to let go of those emotions, because you know that the chance that the current daily candle is going to hit that stop loss is very low, unless it breaks down completely. That mindset, it's the same mindset you have in lower time frames. It's just that you zoom out and you kind of take it a little bit slower.
Yeah, no, I think if you found your niche, you found the thing that works for you and that it perfectly aligns with your personality and exactly what you're trying to achieve by being a participant in the market, you should hold on to that. Like, don't let it go.
Yeah.
So if this works for you, by all means, go in 100% more into it. You know, like steer into the skid kind of like thing instead of trying to battle and trying to like trade like somebody else. Because I feel like there's a lot of people that get impacted. But let's say, for argument's sake, we look at Dubakur now, who's you know, seemed very interested about the fact that you were only trading on the daily chart. Now imagine that he gets impacted by what you're saying and he wants to go and trade the daily chart now. It might not necessarily be the best for him because it might not align with his personality or might not align with his goals, as an example. But for you, it works perfectly because this is tried and tested. You've done all of the other stuff before, the intraday, the swing, the position, all of that stuff, and this just works for you, that you found that this works for you. And I think everybody should go through that same process. Find the thing that works for you. Get it to be aligned with, or find something that is aligned, let's rather say, with your personality and what it is that you're trying to achieve, and then just go with it hard. You know, just have full confidence that this is the style that you're going to work with and just go with it, you know?
Yeah, I think
like Dubakur is saying, sure, but his idea behind is valid, so it is useful as long as you understand what Jonathan is saying. That's exactly what I'm saying. It's just like, you might be impacted by it, but you still need to go and find out whether or not it's actually going to work for you. So go and test it.
It's a very simple process of understanding where your personality is and how to align it with trading. Because if you basically have 3 different main type of trading styles. You have the scalpers, and then you have the day traders and the swing traders. And then you, of course, you have the combination of all of them. And if you're going to combine them, you usually have day traders and swing traders. Usually what you do then is like you're a swing trader when you're analyzing the markets, and then you're a day trader when you're executing those trades. And I think for most people, I'd say probably 75% or even close to 90% of you guys watching this, you're swing traders in terms of your personalities and in terms of where you should be trading. But I know that maybe 90% of you are trying to trade lower time frames because you think that that's where the money is. And it's true in a sense. Good day traders make more money than good swing traders just by looking at the statistics. If you have a trading strategy that has a specific statistical advantage, and you have the same statistical advantage as a swing trader and a day trader, then the day trader is going to make much more money because the day trader has more trades. And the more trades you take with a specific statistics, the more money you're going to make. If you have the same expectancy per trade, then taking more trades will make you a lot of more money. So if you do have a profitable system and you're profitable trading that system, being a day trader is going to be much more profitable. But the problem is that it's much easier to find a profitable strategy as a swing trader than it is a day trader. So if you have
it's more time to react to variables that come into play. There's less noise.
Yeah, and the issue is also a lot of people they want to be scalpers, they want to be day traders, and it's kind of like you can make money as an athlete. Let's say you're a basketball player or you're an ice hockey player, and you're not the very best, the number one in the world, but you're somewhere in the somewhere in the top. You're still making a decent amount of money. You're still pretty good, but you're not the best. If you're going to become a long-term consistently profitable scalper, then you're going to become the number one. You're going to become the best of the best to be able to do that long term. But as a swing trader, you can still stay in that mid-range and be happy about what you're doing. And I think that's where most people should align themselves, because just like you need to have top genetics to be the fastest sprinter in the world. I mean, for me, for example, even if I worked out my whole life, I would probably not be the top sprinter in the world unless I had the genetics for it, right? It's the same thing with Michael Phelps. Like, he has the superior genetics. It's just, you have to accept that. It comes to a point where it's like, okay, you have to accept that. And the same thing comes with trading, you know? Some people are going to be better at trading, and there are certain people out there that are just made to be traders. And those are probably going to be excelling at the most difficult thing that there is in trading, and that is discretionary scalping on the lower time frames. But as a swing trader, you can be average and still make a decent amount of money. So I think that's what I think people should be aiming for first. Become long-term consistent, profitable on the higher time frames, and try to get a sense for. Because the level of stress, you know, your level of stress will guide that decision. So if you can't sleep at night with an open position, then maybe you'll have to rethink swing trading. But then again, if you can't, you know, if you can't make money on the lower time frames, then maybe you have to rethink that as well. Yeah. Maybe don't trade, you know. And it's you got to follow the path of least resistance when it comes to stress. So for me, for example, I love the idea of trading lower time frames. I love the idea of just saying, okay, the first hour of the London session is where I'm gonna be. That's where I'm gonna be fully focused, and I'm gonna be trading. And I've tried so many times to develop a system for that specific time period, and I've succeeded in developing systems, but I've never been able to execute it live, because I can make maybe 1 or 2 good decisions in my trading in a day, which means 1 or 2 decisions scalping, I'm done in the first 5 minutes of the session. You know, while some people can be completely calm and just not get affected by the moving prices or the fast volatility, and just know exactly what they're going to do and execute on the lower time frames 10 times a day without no problem. And if we're able to do that without any level of stress, then you might have what it takes to become, you know, one of the top traders in the industry, which I believe everyone that trades successfully in the lower time frame scalping is part of the, you know, top in the industry, because it's difficult. It's very, very difficult.
Yeah, I was going to say that when it comes to scalping, your risk of ruin, I think, is also a lot higher, because purely on the idea that you're participating more often. And because you're participating more often, you also tend to risk a little bit more, because you spend so little time in the market that you want that quick, fast entry, and you want to make as much money as you can as quickly as you can. And then that just correlates to the risk of ruin. The more you participate in something, the more chances there are for you to actually go on a losing streak, or go and absolutely wreck your account, because, you know, it's still part of your plan to trade, I don't know, 100 trades a day, that kind of like thing. But if you're doing swing trading, or you're doing more of the much higher time frame daily kind of trade entry points, and you get a trade once a month, your risk of ruin is so much smaller, because not only are you allowing your trade the opportunity to breathe, but you're also not participating as much. So that's why you're saying an average trader is going to, as a swing trader, is going to have skin in the game for much longer. And in the long run, that period that you're in the market and you're doing your let's say 1% risk per trade, at the end of the day, 5, 6, 10, 20 years down the line, you're still in the game, still trading, still profitable. Where that scalper, that was a great scalper, but not the best scalper, lost several accounts in 1 year. They're still profitable, but, you know, the amount that they paid to play comes into play as well. They've lost accounts, you know, they've had to reload, basically, get new evaluation counts and stuff like that. Yeah, great. On paper, they're profitable, but it's like a flash in the pan. The person is burning the wick from both ends, or burning the candle from both ends. That eventually just the numbers come into play. They all average out at some point.
Yeah, and I think, like I said, the risk of ruin is much higher. Not only from a probability standpoint, but also from a more of a mental point of view as well. It's quite demanding. I'm trying to go through the markets here, see if I can find anything interesting. Let's see. Let's look at the dollar currency index. Yeah, big move to the downside here. We have 1, 2, 3, 4 consecutive losing days here.
And we do have
weeks.
We do have the flash manufacturing and services PMI in 20 minutes.
Yeah. Let's see about that.
Gold seems like it's just broken above my 15-minute base. Slowing down ever so slightly. Doesn't look horrible. So yeah, I think we're making our way towards this top end potentially. I mean, if we've already had negative news for the dollar, and let's go on the assumption that PMI is also going to be negative for the dollar, and we're going to just carry on buying gold, this is the next logical area is up over here, in my opinion.
Yeah, this is a really strong move from gold here, I think. We'll see what happens when we reach the highs of this range. If we get a breakout here, I think that's going to be the break into new all-time highs, most likely, and probably going to be start of something big. Interestingly enough, we have silver is not moving with the same force here. If you look at the daily, we've basically been in the same range here now for 3 or 4 days. So yeah, nothing here. Question: Would you buy here? So buy on gold? No. I wouldn't buy here on gold. I mean, we're looking at no. I mean, you don't buy after the move has happened, right? That's especially not this late. I mean, if you're a momentum trader, you want to get in, obviously, on this move, and that move was, you know, fairly started around the news event, I believe. So, yeah. I mean, if you were a breakout momentum type of trader, buying this breakout here on gold is definitely valid. But now we are trading quite high. I think if you're looking to buy anything, you shouldn't be looking at. I mean, you shouldn't necessarily talk about or think in terms of what's cheap and what's expensive, but you should be thinking about the trend and try to pinpoint the areas in the trend that is the best entries. Judge says we all wanted to do that, but I agree totally that the news will push gold higher. I don't think everyone wanted to do that, because then what's stopping people from doing that? If you have a system and the system tells you to buy there and you didn't, then I don't know what, like, I mean, buying here today was risky, very risky. So I don't think it's a good idea to buy down here. But when you see the volatility coming in, But it's very easy to be trading in hindsight, right? I can just do this and say like, you know, here, would you be buying here? Like, would that be a good buy? You look at this and it's not going to be a good buy, right? That looks like a terrible buy. But then you fast forward a bit and you're going to be like, oh shit, that was a good buy. I wish I bought there, you know? Yeah. So it's very difficult to just look at something and be like, oh, I wish I bought, that's a perfect setup. You only know it's a perfect setup because you saw where price is going. And that's a difficult with technical analysis, you know? Like you gotta, yeah, difficult. Trade open on plus 1,900. Is that plus $900? I would just close that trade and I would get the payout. That's what I would do if I were you. If you're funded.
I mean,
get the money.
You're saying, but I think I would just continue to let it go now. Now, here's the thing. This is where your risk management is going to start
take
coming
the money. Like, why would you? Why you want to let it go? Take the money, and then you be. If it's a funded account, you take the money. If it's an evaluation, I don't care. You can let it run. You know,
yeah, let it run.
And then you get, and you know, then you lose the account and you get a new one. It doesn't matter. But if it's a funded account, then why don't you take that $900, go buy yourself something nice for Christmas? Like, yeah, that's what I would do.
I made this mistake.
I made the mistake twice. Okay, how about you make that mistake 2,000 times more, and then you come back. You made this mistake twice. 2 times is such an insignificant amount of times that you made that mistake that you can't be basing anything on that. What if your next 4 times holding the position is a terrible idea? Terrible idea. It's never a good idea to hold a position because something has happened twice in the past. I think you need at least, I would say at least 50 occurrences before you can even think about having a statistical probability, and then maybe 200 in the next step.
So Judzer, how are you currently managing this trade? Where's your stop loss? Is your stop loss all the way down at $0? Or are you kind of like having it trail behind, I don't know, $100 or so behind your current price, that kind of like thing? How are you?
So I'm moving my stop with every higher swing low. So if there's a higher swing low on the daily, then I'm moving my stops up basically. So this is my current trade, and I'm looking for a move into break into new all-time highs and then hit the area around this minus 0.618 of the extension of this move. So what I'm trading is this right here. Basically, that's the trade, and then I'm taking the fib from this low to that high, and that's that fib, and then I'm projecting the Fibonacci extensions, and I'm taking profits at the minus 0.618, which is a break into new all-time highs, hit that level, and then I'm going to be moving my stops up with every higher swing low. So if price comes down here and then trades higher, I'm then going to move my stops here. And usually what happens is I get stopped out with my by price hitting stop loss in profit, but then eventually I'll have a runner that takes out that TP.
Yeah, so Judger is saying his stop is at half of his profit. So you're willing to okay, you were up to 1,100. You're willing to lose $550 should it decide it absolutely tanks from now.
Yeah, but I don't think about that.
No,
like
no.
I don't think what I'm. Yeah, but I'm all like I'm not thinking about losing money or winning money. All I'm thinking about is, okay, so what's the trend? How can I join the trend? And what are my rules for managing risk within that trend? I don't like. Of course, I look at my open P&L, but that's not like my goal. And what makes me happy is when I enter into my journal, have I followed the plan or not? That is, I don't really care about the money, because I've had payouts, I've made money from trading. So whenever I get something deposited into, whenever I withdraw money from a broker or request a payout and I get the money into my bank account, it's like it's business, you know, it's just business as usual. I don't really care about that. I'm getting, you know, I'm getting the payout, I'm getting the money, and I'm getting paid to do what I do, and that is trading. And imagine if everyone was just being, you know, euphoric every time they got a salary, you know. So, but what I look forward is, can I, with absolute honesty and dignity, write in my journal that this trade followed the process of my trading system? And if I can do that, it's the world's best feeling, because I know that I went many years looking at my trading journal and just getting anxious about the idea of, why can't I follow the plan? Like, why am I moving the stops to entry too early? Why am I getting stopped out, and why am I not following the initial plan? And we all have been there. I know most of you watching, we are there. You know, I mean, you're there. You're making the same mistakes over and over again, and it's probably very frustrating. But I'm past that. I'm at a level now where I remember that time, and that's why it's so rewarding when I can confirm to myself that I've stepped away from that. I've gone over that threshold, and I'm now consistent. And it's a wonderful feeling, but you have to detach from the monetary gains and just trust the process, and you'll get your salary, you'll get your pay, but you're going to show up to work on Monday, whatever, you know, and just follow the process.
I mean, that's a lovely way of thinking about it, where if you completely detach from the impact of the P&L and the importance of the P&L, and rather the importance of what is going to lead to that P&L becoming a realization, and that is the process. It's difficult still for a lot of people, where you completely detach from the importance of that P&L, or let's say the after effect of the P&L. If you hit profit, you're going to be happy because congratulations. If you hit SL, you're not going to be so happy now, are you? But it's a daily task. It's like it's an opportunity every day for you to just test it and try and be okay with it. So, I mean, like Judge is saying now, like SL is at 900, he's moved it up, but the price is now at 1K, and we just had the New York Open now. We have news coming out in the next 8 minutes. One of two things is going to happen. Your profit's going to get more, or your stop loss is going to get hit. It's one of the two.
Yeah, you know, the thing is that the fact that you are here telling us about your P&L, that should be a really good signal for you to close the trade and take the money. Because I you know, it's not like I go on live streams and like, oh, well, I'm up, you know, $1,000 on gold. If I had to do that, I mean, I know what you're doing, like, and I appreciate you being here, and I appreciate you sharing everything, but there's other people watching this live stream, and they're like, yeah, you know, they don't care about sharing their P&L because it's not that big of a deal, you know, and it shouldn't be that big of a deal. If your unrealized P&L becomes a big deal, then you've probably made a mistake, even if it's good or bad P&L. You know, you probably did not follow something in your system. It activates the some type of dopamine kick inside you, which is in trading is never a good thing. It really is never a good thing. But you got to reward yourself as well, right? You got to reward yourself as well. And I think if you, I reward myself for having a good trading process. So if I can go into my journal and I can safely say that this month I have followed my process, then I'm happy to, you know, reward myself for following the process, which doesn't necessarily have to be a monetary gain.
Look, I think as a means to build confidence in your ability and in yourself, let's rather say, celebrate the little things. Give yourself a tap on the shoulder saying congratulations. You followed your plan. You did something that was in line with your ideals and your morals and stuff like that. But unrealized profit is exactly that. It's unrealized. It's that thing of it's only over when it's over. It's that the fat lady has sung, now it's done. In this case, congratulate yourself after the trade is complete, and congratulate yourself for the right reason. And the right reason would be I followed my plan. The P&L, the realized P&L, is a after effect. It is a, how can you put it? It's due to the process. You don't get P&L without following a process. A good P&L, at least. You might just get lost. But I mean, the point still being that exactly what you just said now, it rings true. But you still also need to build that confidence if you haven't yet built that confidence in your own ability. Then it's fine. Okay, just give you a tap on the shoulder. Congratulations, you did really well. Good trade. Mark it down. But even if it was a loss trade, just mark it down. It was still a good trade because it still followed my process. In this case, congratulations, you just made $1,000. You probably made a lot more than what a lot of other people were trying to make. But I wouldn't say get into it now. Get into gold right now because someone else has already made $1,000 on their trade.
There's some interesting if the moves that we've seen the last 2 weeks or so in the Forex market is continuing, I think we're going to get some pretty good trending moves here. Some interesting directional moves in the coming months or so. So we did hit a lot of interesting levels here. And we have the start of like CAN CHF could potentially start something bigger here in the next few days. We also have, I believe it's AUD NCD. Let's take a look at that one. Yeah, AUD NCD. This is a long I'm in as well. And if you look at the daily, I mean the weekly, we can see that we've broken above a range. First time establishing a weekly structure above here since the last for the last 13 years, I believe. So it might be the start of something bigger here for AUD NCD as well. So I think now we might be able to position ourselves for some really big moves. And I think gold is, I mean, that's one of the reasons why I entered gold here, because I do believe that I really wanted to position myself here within this area, because the risk to reward would have been really, really good, but I was a little bit too worried about that. And then I was a little bit too worried on the retest here. So, but then eventually I went in and I said, okay, I'm going to sacrifice some risk to reward here, but at least I'm going to get into the move where I think it's in the direction I think it's going to go. Something else I'm watching is USD JPY and Euro NCD. I believe if you look at Euro NCD, it's trading in an area where we haven't seen Euro NCD up in these at these prices since 2009, which is over now. What is this? 17 years or so. It's pretty impressive, right? And at these levels, we are most likely going to see a price trending back to its mean price or average price or whatever. Yeah. And if we look at the weekly, I do see an uptrend. Obviously, we can just mark out this like this. But up here, we are now seeing local equal lows and rejection in here, which prints a head and shoulders. So here I'm thinking we might come down and test that level, which is the area around 1.96 or even lower. I mean, even lower on the long term. If we're going to get a return back to average prices on the long term, I'm talking in the next 1 or 2 years, or at least throughout 2006, we might get a massive move to downside on EUR/USD, and we are printing that head and shoulders pattern right now, and the right shoulder is printing now. So what I would love to see here is for price to come a little bit higher into this region, and then I want to try to execute a trade here for that overall trend to break, because I am seeing some signs of some actual shifts in the Forex market. If we look at this from a weekly perspective, this trend has been active for about like 1,200 days.
4 years.
It's time to, so I think it's time to see a reversal on this. And you know, same thing goes for EUR/USD. Like, I'm the type of trader that I try to look at the high time frames, and then I try to identify where is the current move going to end, and where might we see a new, like a massive cyclical move form. So looking at EUR/USD here on the weekly, we I believe we are at a level or close to a level, close to a level where I think we're gonna get a rejection. So that's also one I'm watching. Well, I don't really know exactly how to trade this, but I do think that we are, I believe, at the end of this uptrend, or at the beginning of a like an extension to the upside, which could be a pretty big move.
Okay, the flash PMI manufacturers and services information just released now. Still above 50%, 51.8 and 52.9 for manufacturing and services respectively.
Interesting.
DXY hasn't really reacted all that much. Gold itself just kind of sitting there at the moment, consolidating ever so slightly. Wow, Rich, you're going for a long run from 8 a.m. now till live. Respect. I had a break in between. I'm all good.
Yeah, you've done. So how do you feel after streaming this many hours?
The same as if I was streaming for an hour and a half.
Oh, really? No, I can stream for 2 hours, and then after 2 hours, I'm done. I am done.
I mean, in the morning it's an hour and a half from London Open, an hour and a half into London session, and then there's a 2.5 hour break, and then it's our regular session, myself and Will. And this has only been an extra 2 hours. It's really not that bad. I mean, I've closed out the stream a few times now, and from my segment going through, I really enjoy streaming. So it's just, if you enjoy something, you don't work a day in your life. Just don't burn out. Don't worry, I've got off days.
I do, you know, I do enjoy streaming. I really do. It's just that there's so many other things going on, and I constantly get messages and emails, and there's just a list of tasks that I need to get done. And then I feel like when I'm live, it's like, I got to do that, and I get stressed, you know. So then, but days when I don't really have much going on, which is never, and I really enjoy streaming. I have a question. Oil as well. I don't recommend trading oil with the fibers, if I'm going to be honest, at least not intraday. We have good spreads when it comes to Forex and at least gold, but oil, we don't have the best conditions for that. And you know, I'd rather be honest than to say, oh well, you can trade oil, it shouldn't be a problem. It does have, the oil market does have a bit higher spreads than. But we'll see. Maybe Saul has some ideas of optimizing that. We'll see.
No, I tend to only trade the let's enough volatility, but not volatility in terms of its spreads. So I want to trade an asset that obviously moves the way that I want it to move, but it's not going to cost me an arm and a leg to participate, you know?
Yeah.
So I want low spreads. I want decent. I don't mind commission. I just want decent commission. I don't want to be overcharged for something just because you're providing me with a service, that kind of like thing.
Yeah, definitely. All right, so I think, let me see, do we have anything interesting going on? I think I've gone through most of the market. Let's see if I can bring that. See if I can go to the link that we have in the description. See if I can find that
For Monday.
Yeah.
I have it on the Discord. On the announcements page.
Right.
Yeah.
Oh, you have it right there. Let me. I can share yours then. All right. So we have right there. This is the.
I'm just gonna zoom in a little.
Schedule right there. So, guys, you can go into the link in the description and check it out and sign up. So you can see right there. We have myself being live with Mitch from Trader Pool, and then we have Michael, CEO of Trader Pool. He is hosting this whole event, and then we also have the CEO of TrendSpider coming on as well, showing you guys how to use TrendSpider. It's a really cool software. So you're gonna find that you're gonna like that. I'm sure. And yeah, it's gonna be really cool. And then we have a session with the two CEOs as well. So that's gonna be super interesting. Really looking forward to that event. And then we have the big debate. No, that's not the big debate. We have the brokers and prop firms. So we got LJ. LJ from the stream as well coming in. And yeah, it's gonna be exciting stuff.
Yeah, I'm looking forward to this. I really am. It reminds me a little bit of the Master Risk event that the Fivers hosted a fair few months ago.
Yeah,
we haven't had a big, I don't know, thing like that in a while. So I'm looking forward to this. I also know a fair few of the funded traders that are going to be interviewed as well. We know a handful of them. So
nice.
Yeah, it's going to be a very nice. I've already registered, so everybody should go and register for this and have a look at it on Monday. So that means that on Monday we're not going to have a regular stream like we are having right now. We'll have this. So
exactly.
Yeah,
that is right.
But we will be back on Tuesday. Norm.
Go ahead. No, go ahead.
No. I just wanted to say we will be back with normal streaming on Tuesday.
Yep.
But yeah, everybody should go link up to this and be a part of it.
Definitely. All right, so we're looking at. I'm looking at Bitcoin here, trying to get an understanding of where we are on Bitcoin. We're holding that 85K level today. Still underperforming quite massively to other risk assets and markets out there, especially gold. We got Bitcoin in that possible downtrend, and we got the gold rallying quite nicely. We got the S&P 500. What is the S&P 500 doing?
Should be about the same as
S&P 500 is pulling back from resistance here. So there's no. So the thing is, when I've gone through my fundamental research, I've seen that positioning is crowded, right? You have a lot of big players, institutions, and whatnot are heavily long stocks. So you could say is the S&P 500, right? So then what I'm thinking is if the positioning is so crowded within these markets, do we have what it takes to really push us above resistance with force? And because obviously if everyone's still in the market, then the market can only go down. So it's interesting scenario here, and I'm not really sure we do have what it takes to move higher. And if we look at the indices here, we do actually have because we got the European indices are actually looking decent here. Dow actually broke into all-time highs here last week. That's interesting. But the S&P 100 is struggling, and the NASDAQ is definitely struggling. I'm trying to understand why. Let's see if we can find anything. All right, Richard, is there anything we have left to say before we close up the stream here today, and we say thank you and goodbye to everyone and welcome them back tomorrow?
No, I don't have much except thank you for everybody for being in today, liking and subscribing. We really appreciate all of you. Yeah, and we'll see you all tomorrow.
Yeah, really do. All right, guys. Thank you, everyone, for joining here today. And like Richard say, I hope you all will come and join us tomorrow as well. Take care, everyone, and we'll see you tomorrow. Bye.
Cheers.
Yeah, the outro. Where's the outro? Do we have outro? We should have an outro. Where is it?
It's delayed.